Hey YouTube, I am live. This is Mike Rosehart here, guys. This is a YouTube live installation talking to you guys about a couple of things. One, I started a weekly live Q&A called Wise Wealth Wednesdays, where we talk about anything, creating cash flow, building businesses, uh, anything related to tax or overall thoughts and opinions on real estate, investing in different equities, whatever it is. I'm here to chat about it. This is just me on my phone right now. I don't have a cable that connects my camera, my Canon, to my computer. I wish I did. I don't. Sorry if the lighting's bad. I just kind of got a lamp here or whatever. Just experimenting at the end of the day. This is Mike Rosehart here at midnight. It's midnight on the Eastern Standard Time. So that's something that's kind of playing into the fact that I'm a bit tired, and I apologize for that. But I need to have 1,000 subscribers. 1,000. I think I have. Hang on here. Let's get my other iPhone here and see what's good. 1,005 subscribers. Wow, guys, I am so thankful. I really owe a lot of this to Graham Stephan, who did a video with me a little bit ago. Check it out on his channel. Really thankful that he sat down and took the time with me to do a collaboration video. He and I have been chatting about this for a bit, and I'm glad it turned out so well. Yeah, that's right, Nicholas. Hey, Gary. Yeah, all the collab videos on Meet Kevin's channel as well. Yeah, thank you. I appreciate that. But I'm just experimenting here, right? And we've got an iPhone there. I just see some questions coming in. Let me see if I can get on the other phone here and take a look at the live chat. Boom. I see people here jumping in. Alex, I'm 19 years old and seeking to be an entrepreneur. Do you believe real estate investing is the best way to accumulate wealth? That's a great question, Alex. I think real estate is, there's a stat, it's from an old book. I don't have it off the top of my head, but roughly 90% of or 80% of the millionaires today made their money from real estate. So real estate investing can be a fantastic way to build wealth. It's one of the ways that I used, but it doesn't need to be the only way. In fact, with like the digital age of digital marketing, and a lot of people are picking up on e-commerce, people are really being able to make a ton of money investing online, right? Investing their time and their energy into online endeavors. So there are a lot of ways to make money online too. Real estate doesn't have to be the only one. I specifically like real estate. It's something tangible. It's something I can touch at the end of the day, and that's super, super awesome because you get to actually control the outcome in a way you can't with public equities. In the S&P 500, if you're picking companies and stocks to invest in, it's very, very difficult to control the outcome because you're relying on management to perform and deliver upon expectations. And having a finance degree, you think I'd have a competitive edge, but my advice to you would be whatever you have a competitive edge in, exploit that, right? If you are, you're really technically savvy and you web up an online business, maybe that's a better way to go. If you have skills in certain areas, exploit those, right? That said, I feel like real estate is really nice because anyone can do it. Anyone can learn to be a real estate investor. I didn't know how to renovate. I didn't know how to hang drywall, lay floors, go through a property and examine and look for the pieces of data and information that would help me make a good decision. I just had to learn that, partly through trial and error, but also partly through a lot of just reading online and great resources like biggerpockets.com. It's a fantastic one to learn about real estate investing and learn all about those pieces that are associated with being successful in real estate. So does that sort of answer your question? That's good. So best way to accumulate wealth, I guess that we can talk a little bit about accumulating wealth, right? So at the end of the day, it comes down to three things you guys always hear me say, right? Spend less, earn more, and maximize returns. I don't care if you're working in a day, the day grind, 9 to 6 every single day, and sorry, this light is killing me. It's right in my eyes here, guys, sorry. I don't care if you're grinding the 9 to 5, 9 to 6 every single day and you're only making 50 grand a year. There are ways to live frugally by spending less, right? So finding economical ways like house hacking and rent hacking to reduce your expenses, right at the end of the day. And then you can take all of that, the difference between what you're making, net of taxes, what you're spending. There should be a decent amount of gap there. If you're making $40,000, $50,000 a year, it's very possible to create those gaps, right? And at the end of the day, you take that and you invest that. I don't care if you're just investing in the S&P 500. Ideally, you're investing in exchange-traded funds that will allow you to be diversified, right? Diversity is key. And I have a video coming out tomorrow about the perfect investment strategy I think that makes the most sense and it's the most passive. So that one's one I'm really big on. Thanks for all the info. I would believe real estate would be the best way for me as my dad has some knowledge in real estate. Perfect. Yeah. I mean, if you have family members that you can leverage, you can leverage some of their time. Maybe your dad wants to come help you do a bit of renovation work, or your dad's into real estate or something. Why not take advantage of that, right? That's a competitive advantage. At the end of the day, you need to have a competitive edge or competitive advantage in whatever you do. So, there are people who invest in real estate who just do a terrible job at it. There are a lot of them out there who just buy mediocre properties with mediocre returns, and they make a lot of mistakes, and they don't learn, they don't improve. And so there are people out there investing in real estate, even in this bull boom market that we've had, right? This huge, what we're calling bubble, right? There are people still that are losing money in real estate. So you can still lose money at anything. There's obviously risks involved, but yeah, I think real estate's a fantastic way. And here's why. Whatever business you're in, whatever you're doing, I'm right down here, leverage is amazing. So people talk about paying down debt, paying down your mortgage. I'm not a big fan of paying down your mortgage. You know what? When you start paying down your mortgage, go back to the bank, refinance, and pull that equity out and buy another house, right? Let's look at a very simple example. If you had a house that was worth, I don't know, let's call it $100,000, just for really easy math. Hey, just saw a question pop up there. Am I in the crypto game? No. I wrote an article on my blog recently, 25andfree.com, about my thoughts on Bitcoin specifically. There are other crypto plays I think that are better than Bitcoin specifically, but I've stayed on the sidelines. I'm, as an investor, one of my, we'll call it investor profiles is that I like to stick to buying for cash flow and buying for arbitrage. And the third way you can buy is for speculation when you're buying anything, right? So if you're buying, back to, I'll finish this leverage example here real quick, and then I'll talk about the cryptocurrency. So 100,000 house, right? You own it outright. You own it in cash. You're like, this is sweet. I have no mortgage payments. Oh, this is great. Dave Ramsey's like, man, high five. Let's go do a debt screen challenge thing that he does, right? I actually think that's pretty bad advice if you're looking to actually build real wealth, because here's why. So in a market where houses are 100,000, let's just, for easy math, call it that. You have $100,000, right, in your house, and you own it outright. I would say go to the bank and get a mortgage, 80% loan to value. Why 80%? Why 80%? Because 20% down allows you to avoid private mortgage insurance. Private mortgage insurance is a sucker. It does kind of drown things down. I see some messages coming up here. I'll get to them in just a sec. I will. Hey, in London. Hey, welcome, hippie Mippy. Nice. Yeah, I'm in London, Ontario. That's right. So we could meet up. All my writing is in mirror effect. Oh no! I don't know how to change that on YouTube. On my camera, it automatically catches it. Shitty. Does anyone on here know how to reverse the camera so that you guys can actually see what I'm writing? When I'm filming with my proper camera, it doesn't do this, but with my phone now, it looks like it's going to do the mirror image thing. Don't know why. Okay, so I'll just talk you guys through it. So $100,000 house, 20% down, you can buy it, right? And if you think about this, you could pull out $80,000 in capital, right? If you refinanced it. So you'd own the same house, collect the same rent from that house, and only have $20,000 in capital. So your return on investment, your ROI, right, is the amount of capital the amount of return divided by the amount of capital you have invested. That gives you your ROI, your return on investment. Now, if you only have 1/5 of the capital invested, your return on investment goes way up. But let's think things through further. If you had one house paid off outright, you actually have the capital to buy 5 houses, right? If you refinanced. So you refinance it, you pull out $80,000, and you use $20,000 to buy another house worth $100,000, right? 20% down, $20,000 of that. You do it again, third house, fourth house, 5 houses. So one house paid off equals 5 houses at 20% down, the same amount of capital. So why would you ever pay down a house when you can have 5 houses at 20% down? I guarantee you, even after the mortgage payments, assuming your interest rate is less than like 9%, guaranteed you'll have much higher cash flow. So why wouldn't you use leverage to your advantage? That's what makes real estate so sexy. Back to the, why is real estate such a great vehicle to earn and build wealth? The truth is, it's because leverage. Banks, People, since the beginning of time, landlords and people who own land and property have been able to borrow at the cheapest rate possible, right? Land self-services the debt. You can rent it out and it'll cover the debt. That's amazing, right? Like it'll cover the actual debt. It'll service all of the interest and put money in your pocket, and you'll pay down the mortgage. You want to refinance so you can keep buying more properties. But the idea being that real estate is just one of those things that, like, let's say you have a business, an online internet business, you're making $10,000 a month with that. You walk into a bank, they're not going to give you a loan. If they're going to give you a loan, it's going to be at like 9 or 10%. You walk into a bank, when I walk into a bank with $10,000 a month in cash flow for my rental properties, for my 10 properties, $1,000 a month each, the bank's begging, they're salivating, they're begging to secure title against those properties and lend me money at 2.99%, 3%, right? Really cheap debt. And when you're borrowing cheap debt, it allows you to invest in, let's say a real estate asset returns 10% net, right? If you owned it in cash. If you levered up 5 to 1, 80% loan to value, right? Your 10% rate of return becomes like 40% rate of return. So I was able to get like 40% rate of return because of leverage, because of cheap debt. When you're borrowing at like 2.5%, I mean, it's just unreal. It's just so hard not to make money in that sort of environment. So that's why I love real estate. I started investing, I was day trading, I was buying and selling stock, and I was like, I'm gonna retire at 29. This is the goal, right? This is like 17-year-old me, this is eight years ago. And I'm like going to university, I'm thinking, in Canada, universities like college, and I'm thinking, I want to retire at 29 because I haven't found a job that I really enjoyed, and I tried a bunch of different jobs, and bank, I had a bunch of different jobs anyway. At the end of the day, it's fantastic. Like, real estate allows you to get returns you cannot get in the market. Like, with a real estate deal, I control every element. I can go buy a house below market value, and then I can take that house, I can lever it up, I can create equity, maybe a little bit of paint, a little bit of new floors, make it nice, realize new value, right? I spent money, but then I also created value above what I've spent, right? So I've created a ton of value by buying a house. I'm in control. When I buy shares as a passive investor, right? Investing in public equities or public companies, you're relying on management to perform, right? Instead of relying on yourself. And I would always say invest in yourself. With real estate, you can really invest in yourself, and that's just an awesome, really sweet thing and a great way to make money. So that's really cool. Holy crap, we have 16 people live. This is sweet. This is awesome, guys. I need to get some more questions here. So the crypto game, I promised I would hit that question real quick. So talking about cryptocurrency, I am not a speculative investor, and that's just because my risk profile is such that I just don't want to take the risk on cryptocurrency. It could, do really, really well, and I think long term there is a play for the cryptocurrency technologies that currently exist. I think it's going to revolutionize the current payment systems, the current way we handle payment systems, right? A lot of the banks currently use old, outdated software, and I used to work in IT consulting, so I know that some of the technology, specifically in blockchain, could transform those industries. And I would invest in that technology, I think, within an ETF, but I wouldn't invest in a specific currency, like, Ethereum or Bitcoin or all those different cryptocurrencies. I follow on the sidelines. I watch a lot of friends who have, made a ton of money and lost a ton of money. It's a roller coaster. I got friends who are making $1,000 in one day and losing $1,000 in the next. I like stable, consistent investments. When I invest, I don't gamble, right? So I'm not a speculator. I'm buying properties for cash flow. If they appreciate, sweet. I'm buying properties below market value at current market value. If the market stays flat or it goes down, I still win because I bought smart. So that's just the way that I've always been handling things. And the nice thing about, when you're investing in a company, in publicly traded equity instead of a cryptocurrency, is that, think about it this way. When I buy into a publicly traded company, often they have dividends, right? They're paying consistent dividends. So even if the price depreciates over a short period of time, until it rebounds, I'm collecting dividends, right? With cryptocurrency, your only out is to sell it to someone else for more than what you paid for it. And so that's sort of a scary thing. With a share in a publicly traded company, you physically own you're a shareholder, so you own what's net of the assets. So all the company's assets, all of their cash flow, their net income, you own a small fractal percent of that, and that is value. That is real. Currencies aren't really generating any real cash flow, any real profit. It's just people valuing things. Hey Noah, just so you jump up here, I gotta get some comments here. Look at all the people on here. This is amazing, guys. I have 1,006 or 1,005 subscribers. Wow, I'm just so thankful that I'm getting to talk to you guys. This is energizing me like crazy. If what I'm saying is resonating, let me know. If you have more questions, you want me to keep talking about this stuff, I keep going all day. In the housing market in London, house prices are low compared to the rent. Yeah, I mean, I've seen it creep up quite a bit since 2012 when I started investing in this market. So definitely I've seen quite an increase in the actual housing price, and specifically the price to rent ratio is something that we'll talk about. I'll do a video on it at some point, but it's called the cap rate. A cap rate is how you value a property. So it trades at a certain cap rate. So cap rate is essentially like the rents minus the taxes, insurance, maintenance. So basically your basic expenses gives your net operating income divided by the house price. So typically in my market, I look for a 10 cap rate, which means, roughly, let's say the property is netting, I don't know, $20,000 a year, it's worth $200,000. So in markets like Toronto, the cap you're going to expect in LA, in New York, in Vancouver, especially Vancouver. Vancouver, Canada is like, one of the most pricey cities in the whole world right now, and the numbers make no sense. I've seen a 2 cap rate come across on the MLS. A friend lives there, and I was there visiting recently, and that's crazy. A 2 cap rate. Who is buying real estate as an investment property that's hoping to self-service the debt, because they're not, but buying with a 2 cap rate? 2 cap rate means that there's like your net return is 2%. 2%. You go buy like a government GIC, right, or a treasury bond, or invest in anything else. Why would you invest in real estate when it's netting you a 2% return? So I just don't understand the Vancouver and Toronto market. If I had property in Toronto and Vancouver, I would probably sell it. I just don't believe in it. At the end of the day, it's just, you got to buy for cash flow first. I came back to what I was talking about here. There are 3 ways to invest in real estate. One, you invest for there's 3 personas, we'll call them, right? You're a Johnny cash flower, you're an Annie arbitrager, or you're a Susie speculator. And you can be all 3. But ideally, when you think about it, you want to be a Johnny cash flower first, because if anything happens to the price of the property or something happens in the market, you don't want to have to rely on the value of the property. This is why people walked away from houses in 2008, because they were relying on the value of the property. They were speculating. If you're speculating, like anything, if you're speculating on cryptocurrency, you're speculating on stock price, you're relying on the fact that prices are going to go up and you're going to unload to someone else. When I buy real estate, I have an exit plan. I plan to refinance it to get my money out. I plan to eventually sell it or whatever for a profit. But at the end of the day, if that doesn't happen, my main plan going in was that I can hold it forever and cash flow it. So I say have both exit strategies. Don't just buy it for long-term appreciation. If it's just breaking even, I don't even know if I really want to own a property that's just breaking even. That's awesome. Could change my name to Johnny Cashflower. I love that. So I'm Johnny Cashflower and I'm Annie Arbitrager. Annie and Johnny are like my 2 best buds. When I'm going into a deal, I've got to have Annie. I've got to have Johnny. So important. Johnny first, Annie second. Annie looks for, Annie Arbitrager. I did a video on this a while ago, but no one's probably seen it. Yes, I just saw something pop up, said financial independence, retire early. Fire. Financial independence, retiring early is what got me into real estate, actually. It was sort of like between house hacking and that, it was a gateway drug where, the goal is that most people aren't happy in their jobs. And I wasn't happy in my day job. I was working 9 to 6. I had to travel to New York and Vancouver on consulting gigs. I was away from my family. Then I'd come back and I'd be grinding. I didn't really love what I did. I hated my job, really. And I've worked I worked at KPMG in accounting. I've worked at, like I say, management consulting for 3 years as an analyst, a senior analyst, and a manager. I worked again as a teller at a credit union, a local credit union bank here in Canada. I've worked for the Canadian Border Services Agency before, did a summer internship there in their border traffic. I was evaluating people going through from the US and Canada in a border town there. So I was seeing a ton of traffic and I was valuing goods that people were bringing in and out, right? And that was kind of a cool job because I was collecting duty on what people were bringing through and evaluating their goods. But a variety of jobs, everything I did was cool for 3 weeks. I was like, oh, I love this is really cool, I get into it. And within 3 to 4 weeks, I was bored. And that was the problem with the 9 to 5 for me. It just didn't work. I just wasn't satisfied and happy. And I knew that I had to be either an entrepreneur or ideally, I didn't have to work at all, right? And then I would just do whatever I loved, right? If tomorrow I don't love something, I just don't do it. So at the end of the day, that's really, really empowering. So that's what financial independence, retiring early is all about. That's so important. I think we should all be doing what we love, right? And the only way to be able to do that is to have passive income coming in that's greater than our expenses. When you have passive income coming in greater than your expenses, you don't have to worry. At the end of the day, you're free. You do what you want every day. because for the rest of your life you can withdraw 4% from your portfolio and be cool. Or if you have other passive sources of income, you can rely on those, and you're not like if you're whatever you're doing, if you're a real estate agent, if you're working in some new business you just started, you're not relying on drawing a salary from that business. You're not relying on that commission. You're not relying on that deal to happen to eat, because your basic necessities are taken care of. So okay guys, I'm gonna hit up these questions. Let's see what's good. Hey Mike, how's it going? Looking forward to meeting with you at the next London on Fire. Curious, were you mostly dealing with student tenants? Are these areas in London that you prefer or avoid? Okay. So student tenants are a whole different ballgame. Here in London, Ontario, we have one of the biggest universities and biggest colleges in Canada. I think we're a really big student town. So a lot of the houses are near the college, near the university. So I did own a few properties near the university and near the college, and I did rent out to students. It's a, you deal with a lot of things there. The nice thing is you don't go to the landlord tenant board. You don't have issues with that. You don't have to worry about, them, not paying rent because you got their parents on the lease. I don't love it because the turnover is really high. So you're putting in new students every year or two. So at the end of the day, student rentals are all right. I've dabbled in everything. I've dabbled in single family houses, duplexes. I actually converted a single family to a duplex. I converted a single family to a triplex. So I've had triplexes. I did own 2 3-story walk-ups that were with big parking in the back that were actually rooming houses. So it was 22 bedrooms and 11 bathrooms, 6.5 kitchens. Just brutal. Like, the guys were calling me. People were fighting in between the units because there's so many people. When you're renting by the room, you have that many tenants, that many problems, that many headaches. But again, all my properties cash flowed really well. This one property alone was bringing me like $5,000-$6,000 net a month. But I was dumping that back into renovating the property and increasing the value before I sold it. So that was something that was really key for me, was just trying diversity. Even though I was in real estate, I was looking to diversify rather than specialize. And I don't know if that's the right call, but I was just learning. And I enjoy trying new things. So student rental game is totally different than single family game. Putting a family in a property, it's totally different than the duplex, triplex, than the rooming house scenario. So there's many different ways. I haven't gone commercial really, per se. I haven't gone full commercial, but that's because when you're borrowing in commercial real estate, it's a whole nother ball of wax. There's a whole nother complicated piece to it. You have to set up a corporate structure, and cost of debt is much higher on commercial property. Commercial real estate has a higher cost of debt, your KD, than residential. Residential interest rates are like 1% to 2% lower, and so if returns are the same between commercial and residential, and less scale was the problem, like you really had a lot of capital to spend, residential outperforms. So that's why I chose residential. It's also easier to finance as well as being cheaper. Next you say, are you planning on sleeping tonight? Raymond, you know that once I get excited, I don't sleep. The fact that I'm over 1,000 subscribers and we have 22 people in this video right now, that is amazing. Like, if you guys are staying on here and you want to keep asking questions, I'll stay on, and I'll just keep talking. I don't know if it's adding value. If it is, let me know, because I'm just going to stay on. I'm enjoying this. I'm interacting with you guys, and that's cool. A lot of you guys are brand new. Like, I only had 300 and something subs, like 350, even like 3-4 days ago before the video dropped. So feel free to, like, I'm just basking in this glory. There's been, how many times I've pulled all-nighters on rental properties and for, before big consulting gigs. I'm a night owl. People who know me, like, it's cool. If you guys are on the West Coast, and you're 3 hours behind me right now, so you'd be what? I don't know, 9:30 at night. You know what? It works well for me, actually, because at the end of the day, I am able to stay up all night. You ask my wife, she's sleeping in the other room. My daughter's sleeping in our other bedroom there. And at the end of the day, it just comes down to, I see more comments coming up. I'm going to get to those in a minute. It comes down to the fact that I thrive at night because my daughter's asleep, my wife goes to sleep. I can get a lot done when it's peace and quiet in the house, and my phone doesn't ring. Throughout the day, you guys don't know this, but I have 2 renovations going right now, and if you guys want to see videos, I might go take some tomorrow. We just dug down a whole foundation to the footing and waterproofed an entire basement. Huge, massive renovation, really cool project. A lot of cool things we're doing in this heritage house. It's got 10-foot ceilings, really cool property. It's duplex. So I can show you guys the renovation videos. I have 2 crews going right now. So we have 5 guys on site at one of the properties, and I have 1 guy at another site right now working away, a contractor. So 2 projects at once, a lot going on. My phone's ringing most of the day. I'm getting texts and calls and things like that, right? And I've chosen that for the next 2 or 3 months until the renovations are done, that I'm actively going to be managing these guys. I just can't lay them off. I really enjoy employing these guys, and they're really good workers, and so I don't want to lay off my main contractors. So I bought a property to keep them employed, to be honest with you guys. So let's keep going, get through these questions. I know I take forever. I like to talk. And so if you guys keep asking questions, I'm going to keep talking. I enjoy, I have high energy, and at night this is when I get shit done. So let's keep going. Mike Watt. Hi, Mike. It's Mike. How you doing, Mike Watt? Thank you for joining me on this live stream. Thank you for being here. This is awesome. Did you graduate college? Do you believe college is for entrepreneurs? Alex just asked that. This can get me talking for a bit, so hold on to your seats. I did graduate. I spent 4 years studying business, finance, and accounting, and actually took some cool classes on entrepreneurial finance and wealth management. So I studied a lot of really cool topics, and I went to Canadian school, the Ivy Business School, the Ivy School of Business. The program's modeled after Harvard, so it's a case-based learning type of study. So very awesome program, very enriching. I did graduate, so I had 4 years in school. You've heard me, you probably have heard on my channel me say is one of the regrets I have actually. An opportunity cost. So there's this concept called opportunity cost, which at the end of the day, you think about it, it's what could you have been doing with your time? So what could I have done? What was the opportunity cost of spending 4 years studying in school? Yes, I did work 30 hours a week while I was in school, and so I was hustling and bringing in income, and I had some scholarships that offset a lot of the education costs. But at the end of the day, it was very, very time consuming. What could I have been doing? I could have been making 50 grand a year in a job for 4 years. So I was out $200,000 invested and compounded. I was out, let's say at least $250,000, probably $300,000-400,000 now, just by going to school. And yes, it's one of the most prestigious schools in Canada, modeled after the Harvard Business Program. Fantastic. I was so excited and elated that I was accepted to this school, and I thought it was going to change my life, and it did in some ways, but really I didn't follow the traditional path. In fact, being early retired, I think I'm the only one in the program's history that's early retired at 25. So I'm sort of an anomaly. It's sort of weird. I probably haven't got the good ROI that I should on the time and energy that I spent and the money I spent on that program. But so yeah, my thoughts are you don't need to go to university. You don't need to go to college to be an entrepreneur. There are tons of entrepreneurs that I've met whom have never been to school, have a grade 12 education. You can find everything online. I think the future of education is moving online. This type of learning, when you're live talking to someone, this is the way that you learn, right? You ask questions, you experiment. I would say go buy, do some numbers, understand your market, but go buy a rental property. Just do it, and you'll learn so much more. I found as soon as I started buying properties, I was so engaged, with everything I was reading and everything I was learning. When you're able to then apply that, that's when you build real wisdom. So talking about Wise Wealth Wednesdays, every Wednesday I'm going to go on and I'm going to do a live session just like this for an hour, 7 p.m. Eastern, 4 p.m. Pacific, where I'm going to walk you guys through whatever you want to talk about. We can talk about taxes, we can talk about cash flow management, we can walk through an income statement, a balance sheet. You want to talk about anything. You have a stock you want to talk about, or an overall market, or my thoughts on the real estate market, anything you want to talk about. You want to talk about how you renovate your aunt's basement, we can talk about that. I know the audience might find that a little weird to just narrow in on one question, but I'm down. If the audience is fine with that, I will answer any question you guys want live. No preparation, whatever. I'll just say what's on my mind. Obviously qualifying with the fact that I haven't really thought in great depth about or researched about the answer to the question. So take it with, these are my thoughts and my opinions. But at the end of the day, yeah, so you don't need to go to school to be successful as an entrepreneur. I think just get out there and do it. The one thing that sticks to mind with me is your network is your net worth. That saying is so, so important. So get out there and do networking events. Get online, talk to the right people. People will help you to grow, right? They'll share with you the cross-pollination of information. All of these things, they make you a better entrepreneur. And I think you'll learn a lot more. Most programs in Canada, I think, most of the college programs and university programs in the United States and North America, in the world in general, don't really prepare you to be an entrepreneur. They prepare you to work in a cubicle. They prepare you for certain tasks that are really, if you want to be an entrepreneur, not really that valuable. They'll teach you things like I spent a lot of time studying philosophical stuff too in my minor in psychology. Actually, I studied some stuff in psychology about the relationship of happiness, and what causes happiness, and do material possessions actually really lead to happiness. And once you reach unlock and unlock financial independence and you're at that stage, that's when you spend a lot more time thinking about what's the meaning of life and the purpose and all this kind of stuff. So that's where maybe your degree might come into a bit of, you might have low value there. And maybe in some meetings, you go in and you have some extra letters behind your name, it helps a little bit, but so does a successful story, right? You could do what I did without the degree. In fact, the degree probably just slowed me down. I know some people who didn't do that in and around, I've met online, and even people in my local market who have been doing it and they've been busting it and hustling, and they're just as successful as they would have been, probably more successful than if they had the degree. So that's my thought on that anyway. Next question. Oh, Nickel. Hey, oh, Nickel. What about cities where most real estate isn't cash flow positive? Yeah, so at the start of the video, I talked a little bit about like Vancouver, New York, Toronto, LA, all the big metropolitans. So at the end of the day, you know, I honestly wouldn't invest in most of those cities unless I had an arbitrage opportunity, because you can't really be a Johnny cash flower in those major metropolitans. So maybe you're investing outside of those areas in the greater area. There's possibility to be a sort of Johnny cash flower, but it's really hard when the cap rates are like 6 or 5, or you know what I mean? It's just when the numbers don't really work and you're breaking even or making a couple of $100. I mean, I guess at least it self-services the debt. So if you're sure that the market's going to appreciate, which again is speculating, gambling, I see speculating more as educated gambling. You know, it's not really strong fundamentals behind investing. But yeah, I mean, you could invest in those markets. Many people do, and they do really, really well, right? The appreciation is insane in places like New York and Vancouver. People bought houses for like $500,000. They're worth $2-3 million now. And if they lived in the house, they got all that tax free. So there's some huge advantages, obviously. I personally look for like a 10 cap rate. That's like the minimum. You know, a 10 cap rate is like the minimum that I'll hit in my market. And it's getting harder and harder as things have been appreciating. Rents have been relatively stagnant in most of the categories, so it's been harder and harder to get there. I think rents will come up, and as rents come up, then so too will property values. That's just the way it has to work. If interest, so I can do a whole segment on my thoughts on the real estate market, but certain things like immigration play a big role in the future value of a geographical market, right? If you have, for instance, you know, a plan, the city's got a plan, or the state or the province or the country has a plan to immigrate 100,000 people into this city, that's going to create a huge demand for housing, huge demand for rental properties, and that's going to drive the overall market up. So that's something to think about too when you're kind of trying to speculate. State of real estate for crypto. That's right, hippie. I agree, honestly. I think it's very risky. A lot of people don't have the competitive edge, right? There are some people out there who have that competitive edge, who know more than the market knows, right? So they have some imperfect information, or they have some asymmetry or a way to have an arbitrage play so that they know something that someone else doesn't know. And in that case, like if you have that edge, go for it. But you know what? Like 99% of people don't have the time and the energy to build that edge and then have that edge. So I would say 99% of people probably shouldn't have more than a small percentage of their portfolio in cryptocurrencies, unless they're investing really just in the technology, because there's some cool plays where you can invest in blockchain technology, and I think there's some future there. Get bought up by some of the big guys like Visa, or you know what I mean, some of the big major banks and stuff like that might eventually acquire it. So I think there's a play there. But the actual cryptocurrency, we have no idea, you know, which cryptocurrency is going to be the winner, right? What if the country, 10 countries got together and picked one, or they built their own cryptocurrency, right, on their own technology, and they backed it, it was government backed, right? Then it would all of a sudden just crush the value of some other cryptocurrencies, right? If it could do all the things the other cryptocurrencies could do, that would destroy the value of said one currency. So just too risky. It's the same reason I don't trade stock really anymore. I have like a few stocks that I play with, but only stocks that I really have spent a lot of time analyzing their financial statements. I'm a value investor first, so I make sure I'm buying for, again, like I buy rental properties for cash flow, I buy companies that I believe have strong financial fundamentals. So I'm looking at their assets on their balance sheet. I'm looking at their ability to get a good return on those assets. And then I'm looking at their overall net income and cash flow. Are they going to be able to give me a dividend back, right? That's the question. When I'm investing in a company, I expect a return on that. I don't just expect a long-term speculative payoff of selling it to someone else, because who knows if that'll happen, right? You can't control the market information. You have no competitive edge. It's hard to really outperform the market long-term if you don't have a competitive edge. In real estate, you can develop that competitive edge. In business, you can develop that competitive edge. You can't do that with publicly traded cryptocurrencies and equities and debts of all kind. All public debt instruments, all public equities. it's really, really difficult to gain a competitive edge. Even the guys on Wall Street, if you look at some of the data, right, the big hedge funds and the big mutual funds, it's something like 90, I don't have the data in front of me, but like 90% of these funds over a 10 and 15 year horizon, net of MERs, net of the fees, the management expense fees they take, net of that, they actually underperform the market. Like, mic drop. Why aren't half these guys fired? If net of fees, you're underperforming the index, the passive index that owns a piece of everything, right? The computers that have an algorithm that trade and rebalance, right? ETFs, exchange traded funds, they are the freaking future, guys. I'm a big boglehead, I'm a big fan of index investing. Why wouldn't you? I have a video, I'm not getting into it too much, because I have a video tomorrow I'm dropping on this exactly, on diversification and what the best investing strategy I think is for long-term safety and viability of your portfolio and growth of your portfolio. Because I think that we know psychologically that gains are felt about half as powerfully, as impactfully to a person as losses. So when you lose money, it's twice as painful. And in fact, if you think about it, you have $100, right? And the stock drops 50%, right? Down to 50 bucks. You need 100% gain to go back to break even. So 50% drop in a stock, you need 100% gain to get back to break even. So it's much harder to recuperate from losses. So that's why I'm very much a loss aversion type of investor. And everything I do, I want to have it downside protected. And that's why I did so well, because on each deal, I made a little bit of money, right? I wasn't going for that, like, shooting to the moon. I could have maybe be a decamillionaire today if I did that. But I chose the consistent, stable path, the one that's replicatable, the one that you guys can follow too. You can also buy rental properties the same way I did and follow the same path I did and unlock financial independence for yourself. So that's something that I think is kind of a positive about the way that I invest in real estate, the way I invest in general in public equities and private equities. What are some undervalued areas in Canada? Undervalued areas in Canada. I think there are some small towns that are potentially undervalued. The caveat I have is places like Timmins, Ontario, and some northern Ontario places, they're very reliant on like mining or natural resources. And so when you're relying on natural resources, at the end of the day, with natural resources in a town that's, say, 40% of the economy is tied to that, if, for instance, a conservative government, like a Republican type of government, we have conservative in Canada, gets in, and those towns do very, very well. But those small towns, if you get a socialist government, like currently in Ontario, we have an election coming up in like less than a week, and it looks like the NDP might win, New Democratic Party, and they are like, we have three main real parties in Canada, and it's the Progressive Conservatives, Liberals, and NDP. And if the NDP were to get in, for instance, as an example, I'm not going to share my beliefs. You guys can probably guess which way I lean on the political spectrum. I'm actually not really extreme on either end, but I'm sort of in the middle. But especially with these towns, when those socialist governments get in, right? The NDP, for instance, they're big on the environment. So they'll shut down those mining operations. They'll shut down and put tariffs on those. They'll not even just tariffs, but also like a regulative environmental regulation that'll require them to basically throw a ton of money into their operation to make it more like green or whatever. Or they'll just pack up shop and move somewhere else, right? And when they close down these areas, they lose jobs. And so in small areas that might be undervalued now, I think it's pretty risky to invest in those markets, because potentially, if a new government were to get in that was not pro, forestry or pro mining or pro whatever, that it might crush that town. Like you could see like a 30 or 40% drop. And not only that, like if you're Johnny Cash Flow, it's gonna be hard to rent your units out when your tenants just piece because they just lost their job. And if in Ontario, the landlord-tenant board does not work very well with landlords. They aren't very favorable to landlords. The RTA, the Residential Tenancy Act, protects tenants. We're not as bad as LA or California with our rent control, but it's getting very, very close, where it's very hard to evict tenants, very hard to increase rents. More than 1.8% per year is the limit. No more than 1.8% per year. So we have no protection for us landlords. And big shout out to Ontario Landlord Watch, I think it is. They have a Facebook group. They're awesome here in Ontario, and they're pushing a ton for support for landlords, and I'm a big fan of those guys. But landlords need a bigger voice, because In a town like that, if you got wiped out, there'd be no protection. There'd be no way to go after the tenant really. They would just piece and disappear, and it'd be really hard to claim any rent. So yeah, so my thoughts are pick a town I think that could survive. It's multifaceted and has many different economic draws in the town. So for instance, in London, Ontario, we're a big university town, so a big employer's university. We have a ton of tech in London as well. We're about 500,000 people in the area. So we're not a huge city. We're sort of small still, but big enough that I think that if something were to happen, we have no major draw. Like we have manufacturing, we do, but if the car market were to disappear tomorrow, we'd still be fine. We have a ton of other big employers in the area that we don't rely on any one single employer, right? We have several diverse employers. That is really good for the Johnny Cash Flow strategy. Make sure you know your market. Wherever you're investing, think about the long-term play. Like in London, Ontario specifically, I am a little bit bullish. I'm neutral, let's say, on London, Ontario. I don't think prices, despite prices climbing, say 20% in the last year and a half, I think that was more just the market catching up. We had a minimum wage increase in Ontario, provincially legislated, that almost $15 an hour. So the lower echelon of tenants, the bottom third of tenants, got a 30% pay increase. So rents have come up quite a bit in this market. And obviously, if properties are valued based on cap rates, based on net operating income, increase in rents drives increase in price of housing. Also, people are selling in big markets like Toronto. We're like not even 2 hours from Toronto, Ontario, Canada. So people are selling their $1.5 million house and coming out to our market. There's some plans about building a high-speed rail. So specifically in Ontario, I think the whole Windsor to Toronto corridor, including London, Ontario, has a huge opportunity to, if we ever got the high-speed rail in there, it was like 50 minutes to downtown Toronto, this would become like a suburb, and I think that would just blow up the house price. But let's play like devil's advocate, and let's say there's one other factor. I think immigration is huge too. London has a huge plan to take a lot of immigrants in. We took like 3,000 Syrian refugees in, which is a large percentage of what Canada actually received of immigration, right, to London, Ontario. And that created such a thing where I was posting ads for rental units, and I would get 20 or 30 applications like begging me to take them, right, take them into my place. And when that sort of demand happens, right, it's really good. You can just increase your rent to whatever the market will bear, and so that drives the market up. So to play devil's advocate though, what if the market were to crash? If we get interest rates rise 5, 6, 7%, I don't know if that'll happen, but let's say it happens here. Right now, I can still get a mortgage at like 2.99% in Ontario, Canada, on a, say, 5-year fixed. Or 5-year variable, you can even get like 2.6 right now, 2.55. I just got a 2.55 variable one, but floating with prime, obviously, prime interest rate. But let's say interest rates went up, because that's what people come at you and they're like, you know what, interest rates are way up, guys. How are you going to cash flow? And it's true. Like if your mortgages are at 8% and your property's returning an 8 cap rate, you're getting pretty darn close to break even. You might even be losing money pretty soon, right? At 9-10% interest rate, real estate can take a huge drop. If you think about that, it's a bit of sorry, I see some comments coming up. I got to hit those. But, it's really a scary thing. So if interest rates were to rise, what we should see is a 1% increase in interest rates should translate to a 5 to 7% drop in price on the properties. That's what should happen if that was the only factor. The problem is there are conflating factors. There are many factors that determine the price of real estate and determines supply and demand, right? If you have interest rates rising, the affordability drops. People can't afford as much. They have to qualify at a higher interest rate, and the payments are higher on their mortgage, so they can't afford as big or as high of a value of a property. So their affordability goes down, but then a lot of people can't buy, so they rent, so then it drives up demand for rent. So then you get somewhere in the middle. Usually rising interest rates make it such that if you guys remember back in like the 80s and 90s, I wasn't, I wasn't investing at that time, but I was born, in the early 90s. So I remember like my parents talking about in the 80s and 90s, just people I talked to at work telling me about like when the market was flat and when Toronto was even declining a little bit, right? In the 80s and 90s, we had some hard times because interest rates were like 19 and 20% here in Canada. I think the United States interest rates were also very high at this time. There are many economic and geopolitical factors that kind of contribute to this high interest, and oil being, I think, a piece of it as well. But at 19, 20% interest rates, there was a time when, and you can go back and read on this, go take a Google, people would give away apartment buildings for $1. And you hear about this. Guys like Grant Cardone and all those guys picked up, I'm sure, some of those deals, right? Banks would foreclose on these properties because people would walk away. At 20% interest, you're losing $10,000 a month on an apartment building. Like literally your rents are locked in or whatever, you know, and you're at 20% interest, you can't even carry the property doesn't even carry the interest payments and the expenses. So it's whoever the deepest pockets that could hold the longest until interest rates went back down. There's a huge buying opportunity because people are walking away from their mortgages for like or walking away from their houses for $1. Like you literally give me a dollar bill, or in Canada we have loonies. If you flip me a loonie, looney's $1. It's a coin. You flip me a loonie, then you know, at the end of the day, you can assume my mortgage and you can have the property. People gave away apartment buildings for $1. Banks were actually calling the richest apartment building owners, the biggest landlords in the city, and saying, "Hey, guy just defaulted on my apartment building. I would love for you to take this apartment building. Like I can't manage this. The tenants are calling me. Like the bank's like, we don't do this. We're not in the property management game. This is destroying us. We just want you to pay the mortgage payments, please." And like the landlord would call back and be like, "You know what? It's 1989 right now up in here, and you know what? Like I'm not making money on my apartment buildings. I'm barely breaking even. Whatever. I'm covering the cost. I'm losing money. If you drop the mortgage, if you cut the mortgage in half, I'll take it." They were selling them for losses. They were begging them just to take the property for half the mortgage, right? And then things turned around when interest rates went back down and things stabilized, and we had, you know, this hyperinflation issue was sort of corrected, right? And interest rates came back down to 8-9%. The property values went way up because then all of a sudden now things are cash flowing, right? And you can refinance the property, et cetera, et cetera. So you think through that one scenario. This is just one of a million factors that could come into play in the real estate market, right? And this is part of why I sold 11 of my properties, was that I was fearful. You know, Canada, we had 3 interest rate hikes in a row. The prime rate went up 3 times. And so at that time I was thinking, you know, the market's really hot. I'm going to cash some out. I have 7 properties right now, so I'm still like neutral to bullish, you know, in the London, Ontario real estate market. And I think real estate's going to be okay, especially in my city. You know, if you got, I think the average house price is around $345,000 in my area right now. I think if you're buying like the $200,000 to $300,000 single family range, you're going to be okay all day long. Like you can rent at 1% rule. 1% rule is if house is selling at $200,000, you can rent it for $2,000 a month. And at that ratio, that quick, like when I'm going into a property, that's a quick test. I have several quick tests and screens because I'll look at 100 property. I'll go online and look at 150 properties and I'll see like 5 or 10, right? So I start screening right from online when I'm looking at pictures, talking to the agents. I'll have agents call me, and so you set up screens. It's just part of how you know which properties to look at, and which areas and things like that. So, sorry guys, little notification popped up on my phone. But you know, at the end of the day, it comes down to you got to really think through what would happen in that sort of scenario, and am I prepared? Do I have pockets that are deep enough to survive that? And I had tons of positive cash flow, so my portfolio survived a stress test of like 8 and 9% interest, and my mortgages are fixed for like 5 years. And I know in the U.S. you guys can lock in for like 30-year mortgages, so you guys are pretty insulated for something like this happening. But think about this, like imagine if your property value dropped 50%, right? Think 2008, but imagine interest rates rising at 10% would destroy affordability. No one would be buying rental properties. People would hold what they had because it's fixed in at like 3%. So why wouldn't you hold that cheap debt? Of course, makes sense. But you know what I mean? At the end of the day, if prices drop that much, a lot of people would just walk away. If you're underwater, imagine if your mortgage is 80% loan to value and prices just drop 50%. You owe the bank, like you couldn't even sell the house, right? For what you know what I mean? So at the end of the day, you gotta think about like, do I want this just for cash flow? I've made no appreciation. I've lost all the money I've put into this property. So anyway, all those factors came into mind, and I'm getting off topic here. I'm gonna keep hitting you guys up because I want to be engaging with you guys. If this isn't engaging, I see we have like 19 people in here. So if this is engaging for you guys, let me know. Hopefully my stream is coming in loud and clear. You guys can hear me and see me. I'm also streaming on like my phone and my computer, so I hope that's not killing your guys' connection here. Hopefully you guys can see me loud and clear through my iPhone connection on Wi-Fi. But let me know if it's good. Someone just say like, it's good, I can hear you. It's good, I can see you. That'd be cool. Anyway, so I'll go through, keep going through the questions, and I'll just keep talking. Nice. I'm glad people can hear me. Sweet. We still have people on the stream, so you guys are obviously enjoying what's going on. So I'll keep hitting the questions, and we'll just keep doing it here. Hey Mike, what resources and tools do you like to use to stay on top of the real estate market? That's a great question. I think I'm saying that right. Yeah, it's there are a lot of different resources you can use. The local Ontario Real Estate Association posts, I think, monthly and quarterly reports in my area that I get access to. It's a lot of that's public information, but get a good realtor. I don't have my license. I've still never got my license because I have some really good realtors that I have a couple realtors that I use actually, but one of my main guys sends me a lot of the data, right? And It also helps that I go and see a lot of properties just because I enjoy seeing properties. So I'll go out and just see properties consistently. I'll search like every 2-3 days. I'll go on MLS, the multiple listing service, the Realtor.ca here in Canada, and I'll look at all the listings in my local markets that I like. I'll pick geographical areas that I know are good, that I believe I can get good tenants in, and I believe are appreciating, et cetera, et cetera. And I'll go on there and just keep an eye on the price, right? And I'll talk to my realtors, and I'll just sometimes call up agents and say like, hey, I saw this house last week. What happened? Like, oh, 15 offers. It went 15 offers and like 10 over listing. So at the end of the day, you know, that's sort of one way to kind of get a feel for what the market price is. You can look at some of the data too. Data is really, really big. You can track and see what the average house price is. Look at the inventory in the market too. That's really, really important. You can see the number of active listings year over year. And right now in London, Ontario, we have a huge supply issue, right? We're getting like 12, 13 offers on properties here. And then when one person gets the house, 11 go on to the next one, right? So we've got this huge demand and not enough supply. So that's just something that kind of factored in. If I had sold my properties today, I'd be like $300,000, $400,000, $500,000 richer than I would have been. So I mean, hindsight's 2020, right? I didn't know what the future price of real estate was going to be, but I knew that I cashed out and I made a considerable amount of money, and it's more than I ever need for the rest of my life. My family, my daughter, my wife, and myself, we can live off the passive income from that forever. So, you know what? I don't have any regrets selling off a lot of properties, but you know, it was something I did. So, hope that answered your question. If I didn't, just shoot another question down in the comments. Be like, hey, Mike, I had a follow-up question, or you missed this one little point. I'd love to hear about it. Keep them coming. I'll keep going as long as you guys want me to. Okay. Hey, Mike. Hi. Hi, Noel. I think we said hi before, but awesome that you're tuned in here. You've been one of my loyal. Is it Noel or Noel? I think it's Noel. I might be mispronouncing that. That's my bad. I haven't seen you at London on Fire in a bit, so it'd be nice to have you come out to one of the meetups. Hello, Michael Chung. I deserve it. Thank you. I don't know what that was referencing, but I hope I deserve it. Noel says 1,000+ subs. Yes, 1,000+ subs is amazing. It's really an awesome feeling to be able to grow, and I hope I can keep helping more and more people, because that's why I'm doing this, right? If I could like change 5,000 lives, that's a meaningful impact, and that's worth it for me. Even if I made nothing from it, at least I've had an impact on people's lives, and that's something that like is my duty, I think. Having, you know, I came from nothing, right? You guys know, like I grew up in a single family parent household. Like my mom was making like $14 an hour. You know, it was really tough for us growing up, and like we even were on food stamps for a bit, and it was just really tough. I moved around a lot as a kid. I feel like I owe this back. Like I wish there was a mentor that had tapped me on the shoulder at 17 and been like, hey, like I just want to share these videos with you. I just want to share this content with you, because that would help me a ton. I went through a lot of pain and a lot of like just growing pains, learning what I did. And it's really painful to experience, like, I've been hospitalized, guys, at a renovation before. Like I was so sick, I was just working, and I was so stressed out, and the tenants were moving in soon, and like it wasn't finished, and the city inspector came by, and I had some issues with like a deficiency, and just everything was happening all at once. And my wife was pregnant actually, and then a contractor robbed me and break his contract. And he like, I have so many stories. I'm gonna do a video on like tenant horror stories. I've been abused by a tenant, not only like verbally abused, of course they're gonna shout at you, but I had a tenant literally take a fist to me and smash me against a wall, right? When I was walking through a property, I walked through a templex with 3 boys. Luckily I had a hammer in my hand. Didn't get aggressive, but like luckily I had that like defense, right? It was like, whoa, and then the boys pulled them off. So I could tell you a whole story, but like I've been through it all, right? Learned in the trenches what it's like just grinding day in and day out. And I wish that I had been working smarter. And I learned to work smarter. I think in the last 3 years, I started developing my network and going out to local meetup groups and meeting people who were doing what I was doing, right? And I think I met the first person in early 2016 that was actually a real estate investor like myself. And I had like 4 properties or something. And I was like, hey, I'm doing this, and other people are doing this in London too. And like, I'm not alone. And there's this website people told me about called biggerpockets.com. And I was like, wow, this is sweet. Because I've been just trying to piece stuff together on my own and trying to put deals together. It's just so hard when you don't have the knowledge and the resources and support. Like the network is so important. You're going through a hard time, and you can reach out to someone and be like, hey man, I'm going through this issue with like my foundation. The world feels like it's ending. I think I bought the wrong property. And they're like, hey, you know what? I know this foundation guy. He can come in there. We can like inject some epoxy in here, it'll fix it, whatever, you know what I mean? Stuff like that is examples where having the network is so important. So get out there and build your network. You guys are so lucky that like today there's so much information out there on YouTube, on the internet. Take advantage of that, seriously. I'm gonna do a video on like what would happen if I had nothing tomorrow, if I lost everything and I was starting at square one again. I think I could do what I did again. Guarantee I could do it again in this market. Like right now in London, Ontario, I could do again what I did the first time, no problem. I'm mentoring a few people and I have a few friends here in London. They're doing it right now and they're still doing it, so it's still possible. But I could do it again probably in like 3 to 4 years. I could unlock financial independence and retire early, which is sweet. Like that's amazing. The old-fashioned way is just working and saving a high percentage of what you earn and then investing that in public equities and index fund investing, ETF investing. That takes like 10 years. So real estate gets you there like 3 times faster because you can use leverage, cheap debt to your advantage. I'm at work, Mike, but all you guys in the fire group are motivating me. Yeah, right on. So we have a group here in London, Ontario that we founded, me and 3 other guys, Matt McKeever, Kellen, and Dylan. We got together and we started this group. I think Matt was more the brainchild. We were meeting up because of real estate. We're all doing real estate in different ways. And I remember Kellen was just getting started in real estate, and now he's blown up. I think he has like 7 or 8 properties here in London. He needs to get a YouTube channel. Same with Dylan, and Matt already has a YouTube channel, so check him out. But yeah, I mean, at the end of the day, we got together and we're like, no one, it's such a hard path to walk. It feels like you're walking against a stream. Like, no one at work wants to hear about it. No one in society wants to talk about retiring early, financial independence. I got written up at work for talking about my plan to be financially independent. With a coworker, we were having a quiet conversation. I never brought it up once, but we got into a debate, an office colleague of mine, about like the concept of how it's possible to retire early. And he's like, no, there's no way. And like, why would you want that? That sounds terrible. You should want to work your whole life and grow in the corporate ladder and blah, blah stuff. Lip service, rah, rah, our company's amazing. You should stay here forever. And I remember that like, just thinking, we need a group, we need people, we need a community. And I was a big fan of like on the forums for Mr. Money Mustache and Early Retirement Extreme and those guys who were doing like the frugality and the personal finance stuff. And there was no one really doing like the 2 of them together, like the personal finance and the frugality, and then the real estate together. Like a lot of real estate investors, they drive the flashy car, they're spending, they're not really focused on the personal finance side. Like how do you optimize for tax efficiency? How do you invest coming from like an investor mindset, like coming from knowing how to do like the accounting statements of like a financial statement, or like a lot of real estate investors are just grassroots guys who know how to renovate and stuff. So bringing those 2 things together was something I thought would give me a competitive advantage. And I'm getting off topic, but London on Fire, a really awesome group. Check that out, guys. We have a Facebook group. Anyone can join it. I don't care where you're from. We post stuff all the time about personal finance and just spending less, earning more, and maximizing returns. I kind of coined that little slogan, but it's effectively what it's all about at the end of the day, right? Everything comes under those categories because that's how you unlock financial independence and that sort of thing. So there you go, guys. Late night hangout. Yeah, Scuba Steve. I don't know who Scuba Steve is. I wonder if it's someone I know named Steve. It might not be, but if it is, then thank you for joining our little powwow. Woo! Here we are. This is a simulation for what it's going to be like when I do my Wise Wealth Wednesdays, because I want to help you guys build wisdom around wealth. And wisdom, people talk about like you gotta have gray hair to have wisdom, and I don't got any gray hair, none, 0. I got some blonde hairs, but wisdom is not just about gray hair and like 30 years in the trenches. No, in fact, like if you talk about like intensity and mastery, right? If you are really intense about something, you can gain mastery over it in about 10,000 hours. Now you can shortcut that a little bit, but it takes about 10,000 hours. And I remember like being like 22, 23, 21 even, getting started. I would go into listings, walk in, and people would be like, who is this kid? Like he's not gonna buy this house. They would pay me no attention, right? And of course I'd go and then buy the house, right? Or put an offer in. And I think Wise Wealth Wednesdays is part of that's gonna be about helping you guys build wisdom. Because wisdom, you can actually pick up experience, right? And people think that like experience is something you can only figure out through being in the trenches. And like you do need some of that. Like you need to go out and be in the trenches to bring up. But I want to help you guys build wisdom, and I can share with you guys knowledge. I can share with you guys my experience, right? And when I share with you the key learning points from 10,000 hours of suffering through real estate investing and 5,000 hours spent online reading, books and tons of blogs about personal finance, when I can share that wisdom with you, you guys can get like stand on the shoulders, like you can stand on my shoulders if you want. It's called like standing on the shoulders of giants, is what they call it, right? And you get that huge boost. And so that's what Wise Wealth Wednesdays is going to be all about, is how do you build wisdom, and then how do you build wealth with that wisdom. So I'm gonna help you guys become wise beyond your years. And wisdom comes from a lot of knowledge and then applying that knowledge with experience, and then eventually you learn to have good judgment. And that's what wisdom is at the end of the day. So that's what it's all about. Okay, gonna keep getting through these. What is the FIRE group? FIRE group is Financial Independence Retire Early. It's a group that we founded here because we were going against the stream, right? At the end of the day, when you're going against the stream in society, you need that support, that network. And so when we meet up, we're like 50, 60 people. Our group online is like 5, 6, 7, 800 maybe now. I don't know, on Facebook. We have a podcast too, the On Fire podcast. I was the first episode, but Kellen and Matt run that mostly. But still really awesome. Check that out too, because they interview a lot of really cool people who do like mini retirements and travel the world. And some guys work for 6 months and take 6 months off. And there's just so many ways to carve up your life, right? In a way that just suits you better, right? So you got to figure out, what works for you. What's the best scenario that works for your life? So yeah, that's financial independence, and having that community is just so important. So that's why we started that. We wanted to help. My secret goal, like between you guys, I want London, Ontario, Canada to be the FIRE mecca. So this term FIRE, this financial independence and retiring early, I want London to be like, I want to plant a flag. We're gonna have a conference here. We're gonna try to put a conference on the next year. It's gonna happen. We're gonna put a conference on, and maybe you guys will come out to it. Maybe it'll even be free. I hope it is. If we can find the right venue, in the spirit of frugality, where like people come together and just cross-pollinate and share information, and share stories, and motivate each other. Because at the end of the day, like I would just love that if we were the mecca of all these people who are doing this, who are entrepreneurs and like financially independent. It would just be awesome. It's like a secret little goal of mine to like create that community. I don't know. I just like it. Okay, gonna legally change my name to Johnny Cashflow. I love that. Like I saw that pop up, and that was amazing. At the end of the day, being Johnny Cashflow is the best way, the best persona, I think, to invest in real estate, especially if you're combining it with the 1-2 punch, like Johnny Cashflow, anti-arbitrage, Johnny Cashflow, anti-arbitrager. So you're buying below market value, you know what I mean? So you're playing all those angles. So your downside is protected because you bought, 80 cents on the dollar or whatever you did. And then you renovated the property using anti-arbitrage. You found a way to renovate. I always renovated below market costs. So I found cheap subs, affordable subs, and I'd work with them to keep the cost down. And I found ways to find deals on materials. Like I could buy lumber 30% off with contractor card and price match here and there. And most guys in the industry weren't doing this. They're old dogs that just go in and pay full price for their lumber and their drywall. And the trades, you know what? You can play them against each other too. When they're hungry sometimes for cash, they'll come in and work for like a good deal. Instead of charging you like $50 an hour, like a contractor might walk in and say 20,000 for this basement. And you could sub trade it out for like 9. So that was some way that I got, market renovations done for below market. And so I not only realized the equity gains for doing that renovation work, but I also gained all that difference because the market assumes I spent more than full price. And so there's an arbitrage opportunity there in most of my deals. So that's another piece there that you can kind of bring home with the anti-arbitrager. Noel, that's right. Financial independence, retiring early. You got it. You're okay. Cool. Thanks. Right on, man. It's the real estate group in London, Ontario. It's actually not supposed to be real estate focused. Just because the 4 of us are real estate investors, like the bigger, we have the Real Association, the Real in London. It's like the Real Estate Association of London. That's real estate focused. London on Fire is not necessarily meant to be real estate. You could just be, there are guys who come out who are just, they have a business, or they're investing in, they have an online like dropshipping business or something, and they're just saving high percentages of their income. And they want to retire at like 40. And so they're coming out and they're walking a different path in life, in that they're entrepreneurs who are focused on like spending less, earning more, and maximizing those returns. They have an interest in that. So that's something to think about. Cereal milk. Wait, can I really say the N-word? What is the N-word? I don't know what that is. I can't say that on the air. I don't know. Mike, any of your properties mortgage free? Scuba Steve, no. None of my properties are mortgage free. You missed in the start of the video, I talked about the value of using leverage as your best friend. So you definitely, 100% definitely want to use leverage as your best friend. So no more than 20% down. At the end of the day, you could buy one house outright, or you could buy 5 houses at 20% down for the same amount of capital. Wouldn't you rather own 5 properties? I guarantee you that 5 properties after all of the debt cost, right, after servicing the interest cost, the mortgage payment, after the loan payments, they will produce a lot more cash flow than one house paid off, guaranteed. So that's my thought on that. Don't pay off your house. If you're borrowing at 3%, the question you have to ask yourself is, can I take that money out of that house, borrow at 3%, and invest that money now at a higher rate than 3%? If the answer is yes, then you should borrow that money and invest it somewhere else. So I would say even borrow from your house and invest in, this isn't proper advice, but you could theoretically invest in, like, you could private money lend at 10% and borrow with a home equity line of credit from your house, right, at 3%. So if you're borrowing at 3% and lending at 10, your spread is 7%. You make a ton of money with capital just sitting there. Why would you have it just sit there and not access it when it's so cheap at 3%? Okay. Tough to be a bull like you when it feels like a bear market is imminent. Martin Smith. That's sort of wise. At the end of the day, I think that you've got a good point. I also, as a very conservative investor, feel like it's tough to get into a bull market. You can still buy, right? You could get private deals. You could go on in the private places, not on the MLS. Go and door knock, or you can go talk to a wholesaler who's wholesaling deals. You can become a wholesaler for yourself. You can go on places like Craigslist and Kijiji and find tons of deals. I've actually found deals by knocking. Like, I was just happened to be on the street and talking to a lady, and I said, "Hey, you know anyone selling your house?" She said, "Oh yeah, like my grandma's selling her house," and I was like, "Oh, I'll give you $1,000 if the deal goes through." And she introduced me, and it was a win-win. Her grandma didn't want to list on MLS, and so you can still find deals. There's still a way, even in the hottest of markets, you can totally still make it work. At the end of the day, I hope my phone doesn't die. If it dies, I'm sorry. Challenge accepted. I like that. If you don't sleep, I won't sleep. Need this knowledge. Michael Chung, that's inspiring, man. I'll stay on here as long as you guys want. But I might have to plug my phone in here because I think it might be dying. You guys are going to hate me, but I'm going to throw off the lighting of this video. Whatever. You guys get a look at my real office. Let's see if I can't get this plugged in here. Boo! Don't drop off, guys. I'm plugging in the phone. Stay on if you are loyal. Ah, crap. You guys still see me? Forgive me. Sorry, my phone was dying. Had to plug it in. Let's roll my chair over here. Let's move this light. Oh, bright lights, bright lights. Oh, the bright lights. Can you guys see me? Am I still? Someone just tell me I'm still on. I'm still live. Am I still there? Gary, you're still here, man. Wow, that's amazing. Gary, you've been my #1 supporter since day one, and so big shout out to you. You're an awesome guy. You're the nicest guy in real life too. He is just the nicest guy. Let's keep going. Okay, all-nighter crew. Okay, cool. 11:24. I'm not sure what 11:24 is, but that might have been a time in the video you're talking about. Hope you guys can still see me. I'm sorry you just see my head now because I'm on my camera tripod is kind of weird and the phone cord is stretched to my phone. Okay, yes, renovation videos. You always add value whenever you start talking. Gary, man, your comments just motivate the hell out of me just to create more videos and keep doing this. I really, really appreciate it. At the end of the day, you guys are awesome. All of you guys who have tuned in today, I love you all. At some point, I'm also going to throw this out there. When I do get the ability to super chat, I once watched a live stream and someone got $1 through a super chat. I want to experience that. Not for the money, just because I actually want, I feel like it'd be so cool, get some real money through online like super chat. So whenever that happens, someone please give me $1. Like even if I have to like pay you $1 to give me $1, I want that feeling. Okay, let's keep going with the questions here, guys. Your reno videos would be cool. Yeah, so I could actually show you guys, we just did a foundation dig. I could show you the outside of the foundation. We dug down like 6 feet, put a new weeping system, egress windows had to be cut in, and then put in like proper drainage system through the tile system, gravel, and then backfilled it all. We had like 4 or 5 guys doing it and a backhoe machine going. It was like this intense renovation. You mentioned you invest in stocks with dividends. Would you recommend? This was from Zaleen Mail. So yeah, I do invest in some equities, and in fact, I myself still have a pile of cash. You guys saw in a recent video, it's in the bank now. Like it's all sitting in a high interest savings account, making 2.5%. I need to go and sit down and build like the ultimate portfolio and get into it. And I know that like time in the market is more important than timing the market, right? You know the saying, guys, you've heard it, right? Timing the market, time in the market. So the theory is that like the longer you're in the market, the better off you're going to be, because things just grow over time. Yes, it's volatility, but they grow over time. My video tomorrow is about I've already filmed is about this, so check that out. But yeah, so I am invested in a couple of companies. I won't disclose what I'm invested in, but it's because I've looked at the financial statements and I believe in those companies. And at the end of the day, I think going forward, I won't be doing any investing in individual equity plays. I'll probably only be investing in index funds, so ETFs. ETFs are so important. At the end of the day, the exchange traded funds allow you to effectively buy small fractal pieces of many companies, and that just ensures that at the end of the day, you are diversified enough that if one market tanks, you own several, so you're kind of insulated in that sense. So that's really, really cool, I think. Can you guys see me? I thought it came up that I got a notification, but I think you guys can see me. Okay. I'm gonna log on my phone here. Let's keep going, get through some of these comments. Imran Aziz said, word, homie. I don't know what that was to, but probably I was talking about something and you agreed with it, which is sweet. Cereal Milk in the comment there. What books do you, so Dookie Boy, what books do you recommend reading after Rich Dad Poor Dad? To be honest with you, I'm a super frugal guy, so I don't buy a lot of books. Whatever I could like stream online or I could hear online. Ones that kind of had big impacts on me are kind of like cheesy. You're gonna, I just saw a comment come up about REITs and physical real estate. You guys are gonna keep me here all night because I can talk a lot. I need to do a video on that specifically at some point. What was my train of thought? I lost it now and I read that comment. So books are, so biggerpockets.com. Listen to the whole podcast on biggerpockets.com and check out all of the articles on there. There's a ton of information, but book-wise, books that changed my life were, it's kind of like, you're gonna be like, oh, whatever. But Tim Ferriss's 4-Hour Workweek, that one was a big one for me. There were some pieces in that were like, I need to really start outsourcing. And for me, that changed, like me doing a lot of the renovation work, to me managing sub-trades, to then like me even like outsourcing even more pieces of my business and building systems. Systems are so important to overall like efficiency. So that's what I would say is make sure you check out those books. They're pretty cool. Are basically teacher in classroom and 22 students. Scuba Steve. Cool. I'm down. I used to do a lot of tutoring and I would do 2 or 3 students at a time, and it's really cool to be able to walk them through a business case and help them to see a new way of solving a problem and solving a case. And I really enjoy solving problems. Here's a pro tip for you guys. You're gonna hear me say it again in another video, but at the end of the day, if you are creating value, if you're solving problems, whatever you're doing, if you're solving problems and creating value, you will become wealthy. Problem solvers create value. If you're creating more value than you're extracting, you're going to have a big payout at the end of the day. Doesn't matter what you're doing. Seeing people drop off. We're down to 14 people. Who's giving my night crew? Okay. Let's go up here. Let's get some of these comments. I know you've said you try to stay within 30 minutes of your home when you're buying. Have you ever considered Windsor, Chatham, or Hamilton? These are local areas in Ontario that I've considered investing in. Yeah. you know what? Like, there's still enough deals in my local area within like 20 minutes of me that I haven't had the need to go to Chatham or Windsor. And the extra drive time, I don't have the connections, I don't have the trades there. I have a lot of sub trade connections here in London. I could get a renovation done like that. Like, I know painters, I know electricians, I know plumbers, I know trades guys. I just know guys who do everything here in London. I've built those connections, then network. To then start in a new market would just be more work for me. Despite like the better ROI, I just really like London, Ontario. And I like to be able to drive by my properties. If like no one else can come and I can't get a hold of anyone, at least I know that I can get a hold of like myself. I can always rely on myself to solve the problem. And you know, I just can't do that in those other markets. Doesn't mean those markets aren't good. Like, I know people are crushing it in Windsor. Totally amazing returns and all that kind of stuff. So it doesn't mean it isn't a bad market. Let's see. Send you a message on Facebook. Let's hang out. I need a little bit of help on a property. Sure. I am pretty busy these days, but I can make time to hang out. I am financially independent, retired early after all. You'd think I'd have more time, but honestly, YouTube, making these videos and, you know, just engaging with everyone and figuring out, you know, different pieces of different businesses. I'm looking at buying a few businesses and stuff like that, and just busy. Like, having kids, having a 2-year-old daughter, it's a lot of work having kids at the end of the day. So that's something that's, you know, that takes up a lot of time. But yeah, we can make time. We'll definitely do it. What are your thoughts on real estate market in Ottawa? You know, I might have skipped someone. I'm sorry if I skipped you. I don't have a ton of experience in Ottawa. I was in Ottawa actually a week and a half ago though, visiting some friends, and we checked out Parliament and did a bit of touring. It's a beautiful city. It's growing like mad. The greater area I think is like 1 point something million. It's the capital of Canada. I like Ottawa. It feels a little bit overpriced to me, based like price to rent, but there seem to be in certain areas the numbers still work, so it's kind of a cool market. Thanks for your take. Me ZZZ. Maybe I'm gonna ZZZ. Maybe I'm getting tired here too. TY for your take on crypto. Random question. I have $1 million net worth by December. I don't want to grow wealth as much as I want to create cash flow for life. Would it be stupid to use the majority of that to buy a quadplex, rent out the 4 units, then use the cash flow to purchase a mortgage for a home for myself? Is there a better way to do this? The short answer is there's always a better way. The question you have to ask yourself is, what is that better way? And there are a lot of nuanced pieces that, like, this is more of a specific coaching thing we'd have to sit down and chat about, right? I couldn't really just give it to you in one thing here without more details. But by the way, congratulations on $1 million net worth. Like, you're financially independent. That's awesome. You could probably use that, depending on your market, to buy quite a few properties. You could also just buy a REIT and collect like 9% on $1 million, just 90 grand a year for life. You could easily get that capital working. I look for 10% like on my average investments, but it's hard money lending or whatever I'm doing, security against real estate. I think you could make a ton of money and have no stress. Like, you wouldn't even have to own the properties and deal with the tenant problems if you don't want to. Maybe you want to, I don't know. It's a good experience, good to try it out. You might find you don't enjoy it. But yeah, if you're $1 million, you're almost financially independent. You could be, if you lowered your expenses to such a level, you could be financially independent with that, totally. And yeah, you could use that to fund your mortgage. You could use the profit from whatever you're investing in, whether that's a REIT or public equities or ETFs. We should have a chat on ways you could allocate that capital. That's more of a financial planning question. We can chat about that because I worked as a financial advisor for a little bit and I had licenses. I don't now. There you go. What's the cap rate you're looking for? I did say what my cap rate was. Around 10 is what I look for in my market. What are your thoughts on real estate market in Ottawa? I answered that question. Thanks, man. I appreciate that he just found my channel and he's so thankful he found it. That's awesome. I'm so glad people are discovering me. I hope that if I can get to like 10,000 subscribers, I think that's when YouTube starts. I just like don't even know, but I think the algorithm might start to promote my videos a little bit more and I can reach a wider audience, because the more people I can help, the better, right? I just do this because I enjoy it, right? It's not really about the income. I don't make anything from YouTube. Here it's like a 6-month wait time anyway to get your videos monetized nowadays, so I'm not looking at money until 2019 anyway. And it'll be like 30 cents from what I hear. No doubt. Mike is a wealth of information, a true genius. He just devours info and makes it easy to understand. All good info. 96 EE. If I could heart this right now, I would. If you leave this as a comment after, when this goes and I put it out here for everyone to see for the after, like the recorded version that goes published, I will like heart that. That was really, I appreciate that a lot. Uh, Stram is perfect. Hell yeah, man, this is awesome. It's good, it's good. So you guys could all hear me. My audio was going okay. I was worried about that. I didn't know. Now I'm in the like far corner of my house. I didn't know if that affects my Wi-Fi's way over there. So I didn't know if that was affecting things. Can't believe we still have 13 people. We've been on here for 80 minutes, guys. And I don't know if it's the same 13 people, but freaking sweet. You guys are awesome. Like, I can't believe I have people watching me right now at like 1 in the morning, Eastern Standard Time. You guys are awesome. If you got value from this, like, please smash that like button and share this after. That would be cool. The more views, the more motivation I have to do this. If like no one watches it, no one sticks on, then I lose motivation. I just go about my real life, which means not on YouTube. Anyway, I know you said you try to stay within 30 minutes of your home. I talked about this one. Hey, Mike, can you archive these live videos just in case people can't tune in on Wednesdays? Yeah, Tim, I can definitely. I'm gonna all of the videos I do. I'm gonna try to have it. I think what we'll do is we'll do a topic for every Wise Wealth Wednesday, like a, maybe we're gonna talk about like personal finance, investing or something, right? Or whatever topic. Well, I'll pick a topic and we'll try to stick to that topic. We can go outside of it a little bit if you have questions, but maybe we'll pick a topic. Maybe that will work. We'll see what works. I'll just evolve and experiment. But I'll definitely upload every live video. Even this one is gonna go, after it's done, I'll upload it so you guys can check it out. So thanks for the comment there. Frozen liquids. I like the spelling of that with a PH. Hey Mike, just discovered your videos last night and have been enjoying them. Cool to see you streaming live. Planning now on buying my first home for myself. Hey, right on. What market are you in? Tell me more. I would love to offer some perspective. Maybe you'll like to hear what I have to say, and maybe you won't. And if you don't like what I have to say, hopefully it saves you a bit of money. And the same thing from Frozen Liquids. Recently got a promotion that will put me in the 6 figures in Texas. Damn. That's some solid money. I think my best year in management consulting, I made like 60 grand. I was so underpaid for what I was doing. They're billing me out, I'm sure, like well over $100 an hour. So that's fantastic. If I could do it on 50 grand a year, you can do it on 100, guaranteed. And I have no debt, extremely low monthly expenditures. Hey, me too. I'm super frugal. Like I was living house hacking scenario where we rented out rooms. Our living cost is like nothing, like literally nothing. So check out house hacking. That's a cool way to keep expenses low. Considering real estate, but not sure I can do it working 40 hours a week. You know what? You could buy more turnkey type properties and outsource a lot of the renovation work and the management and still do really, really well. So that might be something to think of. I think at the end of the day, depends on your market. Like in Texas, I hear that property values are not very high, and like rent's decent. So you could probably do all right in that market, depending on where you are in Texas. But yeah, I think you should consider real estate. 40 hours a week, you know what? You get off, you still have the weekends. You can still get things done. I used to be able to take calls at my desk sometimes on lunch and problem solve. If you're willing to take on a little bit of hassle to make like a decent amount more money and unlock financial independence for yourself, you know what? I think power to you. So it's up to you at the end of the day. It's a lifestyle decision, and I can't tell you what's right. I can only tell you what my thoughts are and what worked for me. It allowed me to retire at 25, so you know what? I'm happy with that. I just see someone said lag. Is there still lag? Or are you okay? Nino Jones. Am I okay? Can you guys see me? Bring back Lord Mike. Man, you guys are loyal. I'm loving this. I'm gonna keep going. I'm not gonna stop. You guys are gonna see my face up close. Maybe that'll help with the, I don't know, I just moved it away from the power outlet. Maybe it would help a little bit with the interference. Okay, loved it, man. Thanks, Farhan. Noel, love the plaques on the wall. Shows your wisdom. Haha. Yeah, that piece of paper over there is a $100,000 piece of paper, and that's all it is. It's literally a piece of paper. Okay. Can buying property from local community be more efficient, or moving to a big city and starting from scratch? I think local is way better than moving to the big city. I think you can get better return on your money in a local area, especially if the area is stable long term. Thoughts on financial independence versus financial security, full-time entrepreneurship, vs with 2 high-paying government jobs plus part-time real estate investing. You know what? Financial independence is awesome, and there's this term that Matt's been using, a friend of mine, called firepreneur. You essentially have financial independence. You're able to retire early, but you are an entrepreneur. So you can't just stop and retire. So you keep engaging and effectively you don't rely on the business for income. You do it because you love it. And so the income comes in and it's more of a bonus than rather something you rely on. So that's something to think about. At the end of the day, if you have a good paying government job, what I would say is go get like 5 mortgages. Go buy like 5 properties when you have those good government jobs, because banks will just love you if your credit score is decent. Stable government jobs, you get tons of, you can go buy like 6 properties one after another and BRRRR them. And then once you get the real estate portfolio going, then maybe jump over to entrepreneurship, because then you'll have that stable, consistent sort of semi-passive income coming from your rental properties to basically pay for everything. So if your entrepreneur venture fails or it takes 2 years to get off the ground, then you're okay, right? You've got 2 years of, you can just take that 2 years. You don't need to draw on the business at all. So that's something to think about, right? I just joined the live stream. Murph Machine, thank you for joining. Will this be on the channel as a VOD? I don't know what VOD stands for. Maybe video on demand, I'm just guessing. But yes, it will be uploaded as a VOD, so you can check it out after and check the replay out. Gary looks like he said, see you, Mike. You must be going to sleep, Gary. Cheers. Scuba Steve's still here. Murph Machine's there. Farhan's there. Michael Chong's there. Lennon Connor's giving me a heart, which is sweet. Hey, Mike, congrats on all your success and thanks for sharing. That's CJ. Thanks for joining on the live stream. That's awesome. Can't believe we're still going. I expected this to go for like a half hour, but you know what? We're still going. And if you guys are still getting value from this, I'll stay on. How do you properly use a TFSA and RRSP effectively? Michael Chong, keep poking me. Like, keep dropping comments on my videos to remind me of a video you want to see a topic on. I just did a video a little while ago about the tax-free savings account. So that walked you through how you use a TFSA effectively. The tax-free savings account is amazing. It's a hugely powerful vehicle. In a few years, it's going to be so powerful that we can like put $250,000 into this TFSA here in Canada, tax-free savings account, and invest in whatever we want tax-free. So you can make like, you can double your money inside this TFSA, make 250 grand tax-free, tax freaking free. So TFSA is awesome if you're Canadian. RRSP is a registered retirement savings plan. I'll do a whole video on how you use that. If you're in a higher income bracket, you basically want to contribute to it to drop your income tax now and then withdraw the money from your RRSP in a lower income bracket year. So in high years, you throw money into your RRSP. In low years, you withdraw from your RRSP. So you can use it to income smooth. So something to think about. I'll talk more about the RRSP, how it works. But 18% of your income, it's compounded. Hey, Border Hopper, we're just going through a lot of questions, making my way down. Welcome to the live stream, and thank you if you're one of the 1,000 subscribers. If you're not, click the subscribe button and the bell beside the subscribe button to get notifications when I drop videos. Okay, when you pay the principal, does that go into equity that you can take out? Equity is what you own. You can take it out if you want without paying anyone, right? So Nico Jones, you know, Nico, the thing of it is this, yes. So basically, as a property appreciates, right? You've got, let's say this, you buy a property for $100,000, you have an $80,000 mortgage, right? As the property appreciates, it becomes a $110,000 property, 105, 110, whatever. It's appreciating in value over the years. The difference between what your mortgage balance is, like what you owe the bank, and what you can sell the property for is your equity. So that's what you own. At the same time, not only is property usually appreciating, but you're also paying down the mortgage. So every mortgage payment, say half of it, I'm just giving you an example. The amortization schedule is such that like the interest portion of the payment decreases over time and the principal portion increases over time, because obviously the balance is getting smaller unless you refinance, which I recommend you do anyway. But the mortgage balance is dropping and the property is appreciating. So your equity is being created. If you do a big renovation like I do, I buy my properties like this, 100 and 80, and I get a mortgage for 80, and then I renovate it for like 10 or 20 of my own money put into it, and then it's worth like 170, right? And then I go refinance it up here and I pull all of that equity out. So when I refinance, whoop, all of that equity just came into cash in my hand, like that 60, 70 grand in my hand. And then I buy another one. I do the exact same thing. That's called the BRRRR, the buy, renovate, rent out, and then refinance the property and then repeat the strategy. You can use that to buy one and then buy 10 really quickly. It's how I was able to buy so many properties so quickly. It's I leveraged the BRRRR to its maximum potential. So definitely that's sort of how it works. I hope I can do another video to give you more depth on that, but I'll sidebar that for now. Hopefully that kind of explained it. Thank you so much. We'll definitely reach out into the future. Thank you for the comment. And Nico Jones, lag, cut out briefly. Nico says we're good. Lag, bring back Lord Mike. It just skipped out, but you're back. Thoughts on house hacking versus rent hacking? Being a tenant, but renting out rooms. Okay, so, I'm just gonna stretch for a sec here, guys. Oh, it's been like, I don't know, an hour and a half or more than that. So that's awesome. I can't believe this. You guys are still here. I have 13 loyal people that are still here, and we had like 25 at the peak. That is amazing. I'm gonna keep doing this if people are getting value from it. To answer your question, house hacking versus rent hacking. I've written articles on my blog, 25mfree.com, about some of this. I think in metropolitan areas with a high cost of living, a high HCOL, high cost of living, like LA, Vancouver, Toronto, New York, whatever. There's tons of big cities in the world. All of these places tend to have really low cap rates. So it's very hard to make house hacking work. At the end of the day, I think that house hacking makes sense in areas where you can buy a property and rent out bedrooms, or buy a duplex or triplex and rent out the units, or buy a property with a garage and rent that as a suite, or rent it out for storage, or buy a property that has parking, using unused portions of the space and then renting it out, right? That's house hacking. You basically turn your house into an investment instead of just a liability. So you get value from the house and in the form of cash flow. So house hacking is amazing in a lot of markets. I think it works really, really well. In the high cost of living areas, I think rent hacking makes more sense. Rent hacking is the idea that you try to find the best deal that you possibly can on a place to rent. And you rent because the rent to buy calculation is such that it makes way more sense. It makes way more sense to rent in these areas, because some of these places are in like New York where, you could buy a house and you can rent it out and you would lose money every month. So in those situations, it's better to be the tenant and better to rent. So you'd rent the space. Let's say you go rent a 4-bedroom for like $2,000 a month. I'm just throwing out a number here. Every market's different. 4-bedroom for $2,000 a month. 4-bedroom apartment, whatever, 4-bedroom house. You can find them in maybe not the best area, but you'll find it. And you go rent those bedrooms out for $600 a bedroom, or call it like $650 a bedroom. So $650 a bedroom times the other 3 rooms. You take the one small room, let's say, and they're your roommates effectively. So you're sort of subletting to them, but they're roommates, so it's legal. And you pay the lease. You pay the full $2,000 to the landlord every single month, and you're locked in on rent, typically on like a rent control. So as the property values go up and whatever, you can just change out rents whenever you want. You can change out your roommates as they leave and get higher rent, $700 a bedroom, whatever. But let's say it's $700 a bedroom now. You got these 3 bedrooms, right? So you're getting 3 times 7 is $2,100 a month. So your roommates are paying you $2,100 a month. Your rent check to the landlord is $2,000 a month. You're making $100 a month to live somewhere. No capital, nothing. That's called rent hacking. In like really expensive markets like New York, you can get your cost of living like pretty low. So like my first apartment, I was able to do that and get our living cost a couple $100 a month. So it's just a way of basically sharing the space in a way that makes sense. You rent a bigger space than you need. It's a really sweet tip. Check it out, guys. Rent hacking is fantastic. It's like, because at the end of the day, you want to spend as little as you can and earn as much as you possibly can. So find ways to earn more income and spend less. So if your living costs like 0 and you can find ways to get like free housing, et cetera, that spread gets pretty big. All of that gap between here, like where my head is right now, I am your savings. This gets invested, right? This pretty face, it gets invested and it grows, right? And whether you're investing in public equities, you're investing in real estate, whatever you're doing, it's all about building that gap. You got to mind the gap. A lot of people don't mind the gap. They make 100 grand a year. They spend 100 grand a year. They have nothing. Their net worth doesn't change. There's no room. You got barely my eye in here, right? If your spread isn't very big between what you're earning and what you're spending, you're going to have an issue long-term down the road. So my thoughts on that, rent hacking, amazing. High cost of living areas, low cost of living areas. I think house hacking makes more sense. You can still rent hack in those areas until you can afford a down payment to then house hack. I rent hacked and then I house hacked. And house hacking was amazing. I still house hack now. I have a tiny house that I have on Airbnb, and I have a lower unit below me. Right now it's a duplex. I live in a 3-bedroom bungalow. I take the backyard for myself, and then I Airbnb like the tiny house. So if you guys come to London, Ontario, hit me up, because I probably have a place that you guys can stay. But yeah, so I do that, and the money generated from that covers all of my mortgage, my property taxes, my utilities. I live for nothing. Like I say I live on $3,000 a month. I live on like nothing. Like I make enough money from my house hack scenario in this duplex it was a single family house that I converted. Like I went through the city, got the permits, converted it to a legal duplex, et cetera, went through all the crap. And now I house hack. And even now, you guys know that I bring in like I'm 5 figures passive income, right? Yeah, at the end of the day, like some months, worse, some months better, whatever. But I'm bringing a ton of money, like way more than I need to live. Like, I'm not bragging. I'm just, the point is that like, at the end of the day, if you create a house hacking scenario, if all my income streams dry up tomorrow or like significantly reduced, I'm okay, right? We're all good. G1 Mercury, man, you've been following for a while. Yeah, so thank you for that. I really, really appreciate that. Let's go down and see what the chat's saying here. Check my messages on Facebook. You want me to check live? Well, I'm streaming from my phone and I have my other phone here, so it's not hooked to Facebook. But I can after check my messages. I missed a question here. Okay, I'm a teen. I'm saving $500. Should I invest that money in REITs or something else? I'll add to fund monthly, and I'm saving up so I could buy my first property. Well, congratulations, man. You've started to save. That's like half the population hasn't even started to get into the positive. So like you're already like leagues ahead. So take like, pat yourself on the back for that. That's amazing. You're saving too, which is like, again, like half the population can't even figure out how to save some money. So you're saving and investing. That's amazing. Again, like pat yourself on the back. Now, what do you do with that, right? When you're just starting out, remember I talked about the 3, I keep coming back to this: spend less, earn more, and maximize returns. I think like you can spend as much time as you can to reduce your spending. You do as much as you can to increase your income at this point. And maximizing returns actually is not as important as people think. Like if you're invested in, say, I don't know, treasury bills or something, or go into your bank, get a 2.5% high interest savings account or whatever, on $500, like the difference between like a 10% return on a REIT and like a 2% return at your savings account is like almost nothing. So it doesn't really matter. I would say like right now with $500 invested, it's more about preserving capital. It's more about like your time is probably best spent right now focusing on how you can earn more money. What strategies can you do to earn more money? What can you do to increase that spread and then spend less? Like the interest on $500 is like, we're talking like $1 or $2 a year. And interest in a savings account. Maybe in a REIT, you might make like 50 or $100 a year interest growth on that money. And that's not to like put down the money, because that's amazing you saved that. Keep saving it. And once you get to a certain, like once you're like on track and you keep saying at the automatic, pay yourself first, right? You set up a pre-authorized debit from your account. I would say take that right out of your account when you get paid and put it aside into another savings account that you can't touch. Just start building that snowball and saving. And as you save, then what you invest in becomes more and more important. So my focus right now for you would be like increase your income and get your spending down, and just start creating that huge gap, and you become wealthy no matter what you invest in. And then once you've built up a considerable amount of capital, then it's time to pull the trigger on a property. Then the return on investment matters. A lot of people want to take $500 and turn it into $5 million, and it doesn't work that way. You really just have to work hard and save. I know it's not what you want to hear, but just saving up that first bit of cash so you can execute on that strategy. That like say call it like 60 grand or 40 grand or whatever you need, 40 to 60. You just got to grind it. I know it's tough, but like I'm here to motivate you. Whatever you need, like you tell me what you need. You need a funny video, I'll do that for you. You need me to do a video on how you can save, how you can find groceries for half price, I'll do a video on it. I was doing that. I was finding the deals on groceries. I was finding the deals on everything. So I'm gonna do some videos on that too. Frugality isn't sexy, but I'll do videos on it. I'm like the people who know me, like when we go into a dinner event, my buddies will be like, I'll be like, order of lemon ice waters for the table on me. And it's like, they're free, right? Like ice water's free. So I'm like the most frugal guy. I'm not cheap because I don't sacrifice on quality, but I'll find a deal to get the exact same thing for less. So there you go. That's my 2 cents for now. Hi, would it ever be good to go in with a trusted friend as a business partner for more capital? Or would you recommend just saving longer to do it solo? That's from Ryan Klein. Hi, Ryan Klein. Welcome to the live stream. It's the first message I've seen. If you've been here all along, then like, thank you for being here. But if you just joined in, check out the pre-recording later on. You can see some decent truth bombs were dropped there, I think. I'm biased. I dropped the bombs. So I thought they were good. But it's up to you guys. You guys can decide in the comments after this video. Let me know if you thought this was good and you want to hear more of this and me to do more of these videos. If you don't like them, then I won't do them, but I think people are enjoying them. So anyway, would it ever be good to go in with a trusted friend? Like we said, okay, so I didn't do any joint ventures on my first 10 deals. I did them all by myself. And I did that because I was partially greedy, partially because I didn't know anyone who would really want to partner with me. So I just had to do it on my own. I think there's enough gravy to go around that you can do joint venture partnerships and still make good money and still do it. In fact, like my deals, my last 6 deals, excluding one that I bought myself, were all joint venture partnerships. So joint ventures are awesome. Partnering with someone makes a ton of sense. In fact, like there are strategies like you can do 1% with a joint venture partner who has a great income. If you don't have a good income, you're an entrepreneur, you partner with someone who's like a doctor or like a government worker or something, right? Who's got a steady salary. You partner with that person, you give them 1% of title, and maybe you give them 5 or 10% of title for nothing. Like you just give them 5% for nothing. Like here, have 5% of this deal, and they sign for the mortgage. They put their income goes into the qualifying, and you get a mortgage now on that at a great interest rate. That's a smart joint venture partnership. That gets you the deal you wouldn't have had it otherwise. That's called creative financing. I can do a whole video on like ways you can get creative with your financing, ways you can get deals to come through in an affordable way. So joint venture partnerships, totally. One caveat: just be very, very careful. Be very, very careful on partnering with friends. I've done it and I've not had any issues, but I've heard people have problems with friends, and when something happens and the deal goes south and you lose a friend over it, it really sucks. So I don't know, just do a joint venture agreement up, guys. Like hit up that joint venture agreement. It's really, really important to do that. The joint venture agreement will protect you. It'll protect them. You'll clearly write out in your joint venture agreement who's managing what, responsibilities, etc. That's all smart stuff to do. Like lay all that out. Definitely lay all that out. If you're going to do a joint venture, and yeah, you can be smart about it. You can even go 50-50. I get people now message me now that I've kind of built a reputation. When I go speak at a conference, people will come up to me after and say, like, hey Mike, I have $100,000. I would love to invest with you. Can we do a joint venture? You find a deal in London. Like I trust you. Put the numbers together. Pitch it to me. Whatever. We'll have the lawyer look over it. We'll do a joint venture agreement, and like I'll put up all the capital. And like Mike, I will give you like half the profit to manage it. And like I have those deals right now. So when you build up the experience and the expertise, and you position yourself as an expert, if it's a turnkey property, I would take 25% of profit, which works out to like 7% of gross. But people will come to you, and you can make deals happen even if you have no capital. You can't really make deals happen your first couple deals with no capital. You need the capital to get started, or you need to find someone to partner with who has capital, who trusts you and believes in you. So that's sort of the way to go. And it's funny, like now that I have the capital, everyone wants to partner with me. But when I didn't have any capital, no one wanted to partner with me. I guess I didn't know anyone back then. So that's just sort of the way it works. That's just the nature of it. I'll keep going here with the comments. So Michael Chung, can you make a video on how you analyze and run the numbers on a BRRRR deal? Yes. Keep reminding me in the comments of my videos. I have it on my to-do list. I want to hit that video up, walking through how I actually do it. I do a little income statement up on each and every property. So just check that out. Let's keep going here. Okay, can you recommend House Hacking's Great by G1 Mercury? Again, loyal follower since the beginning. I appreciate that you're here tonight. Scuba Steve, can you recommend any high yield REITs to look for? Thanks for all your time you're spending teaching us. If I was you. Thanks for all the time you're spending teaching if I was you. Okay, I appreciate that. Yeah, no problem. I'm happy to give back. I've had a lot of success, and that's because I've worked really, really hard. But it's also because in the last year and a half, I've met with a lot of really great people, and some of them have taken me under their wing and share with me, tons of truth bombs and just knowledge bombs. And I want to give that back to you guys. It feels really good to give back too. And like, if you guys, are getting value from this, I don't get paid from it, but it's really nice. Maybe someday I'll get some passive income from this, but it just feels really, really good, in truth, to help people out. So there you go. I would need some water from Scuba Steve. And sorry I didn't answer your high yield REITs. There are tons of REITs on there. You can go and take a look in the US and Canadian indexes. I looked at some private REITs actually. If you're an accredited investor, you can invest in private REITs, and they don't have the same fees that the public ones do, because they don't need to go through the same rigmarole related to audits and things like that to meet like current standards to be listed on a public exchange. So they have some cost savings there. Yeah, like there are some private REITs in my local area that do exactly what I do, and they have economies of scale, but at the end of the day, there are also some downsides. I think REITs are fantastic. If you outsource all of your time, your energy, you get a similar return to a REIT. Like if you hired a good property manager and you paid them to like rent the units and all of this and that, and like you didn't do a thing, you hired everything out at full market cost, you'd effectively be just as efficient as a REIT, because a REIT takes your dollars, they lever them up for you, and they buy tons of properties, and you're owning hundreds of properties. So if like something happens, you're not relying on like one or two properties. If one doesn't burn down, you're good. Oh crap. Phone is dead. I'm sorry guys. I can't read any more of the live chats because the phone is dead. Ugh. If you, I can see when something pops up. So if you just like shoot the questions to me live, I can read them. You just gotta keep saying them again and again so I can see them. So put a question up right now. I'll talk on it. Sorry if I didn't get to your question. We've been doing this now for, I don't know, an hour, almost 2 hours now, hour and 40 minutes. You want me to go on? Yeah, you know what? I got one right over there. Just my phone charger won't reach to the iMac over there. I should have brought 2 phone chargers into the room. I didn't think to do that. Okay, let me see if I can get this here. Oh, hang on, I brought it up here on the phone, live, guys. Okay, our most real estate acquisitions primarily BRRRR, under market value. Most of my properties have been under market value, and a lot of them were BRRRRs. You know what? Not all of them have been, but a lot of them have been. I was running a business inside school. My employees found out I was making 200% more than them and demanded more pay, or they'll quit. I'm worried that'll happen with rent. Whoa! Sorry, guys. This is why you don't use your phone to read the comments while you're filming. So I have a second phone, and the phone's dead, so I can't do anything. And my phone is plugged in, so I can't go all the way over to the iMac over there and read the comments unless I like slide with my chair back and forth. I could do that, but I don't know if that would be a good user experience. Okay, let's keep up the questions here. Yeah, I have a computer. Grab the phone charger, Mike. I know. It's plugged into, my only one right now is plugged into this one. I don't want to leave this stream. Next Fire Meetup, it's a great question. I should know this off the top of my head. I don't. We have one a month. So there'll be one towards the end of the month in June. So in like 3 weeks. So Jay, come on out if you're in the area and you want to come out. Okay, Thank you for your input. I need to go soon, but I want to ask you if you got my message on YouTube. Thanks, and keep being awesome. I don't know how to get messages on YouTube. I still haven't figured this one out. Hit me up on Instagram if you can. Slide, like it's in the comments. I'll put it in the comments this video, but on most of my videos, in the comments is my Instagram. That's a great way to DM me. I have Facebook too, but Instagram's better. I'm just figuring out Instagram for like how to do good posts, but curious your thoughts on moving to a market with more affordable deals. Buy first, then move local, or move first, then buy after. Yeah, you can. I think moving to the right market can make sense. Just make sure it's something you want to do before you make a move like that. Don't tell them, offer them below market price. Yeah, I mean, at the end of the day, you just don't tell them what the rent is. And if they find out, you say, this is the market value of the bedroom. This is what a bedroom costs to rent here, and that's what it is. And most of your friends, they don't mind if especially if I had like one friend and 2 randoms in a place that I would do it. Then like the one friend, I'd be like, yo, I'll give you a deal for like 600, and the other guys are 700, and they don't know that the rent adds up to like $19,000 or $2,000. But yeah, I get the same thing. Like when you're running a real estate business, sometimes sub trades will come at you and be like, oh, you made like 30,000 on this property, pay me more. And I'm like, I'm gonna pay you market value. That's all I can pay. You know what I mean? Like just because I'm making money doing what I'm doing, because what I do is high value, doesn't mean that all of a sudden you as a flooring guy or you as like a painter are worth like $50 an hour. Like no. I'm sorry, I'm tired, guys. So some of our responses might be a little short or salty. I'm missing some responses here. Definitely trying to replicate the snowball. Geo on Mercury, yes. I'll do more videos on this, like specific PowerPoints, and I'll break out exactly how you can do it, because it's totally possible. There's a guy in London right now that I want to have on my channel who's doing this. Like I need to have him on my channel because he's been doing this the last 1.5 years, and it's still possible. People are still doing it. So, and I was still doing it. Like last year I did like, I don't even know. I did like 10 deals in 10 months between 2016 and 2017. And I just bought like 5 properties. I'm buying right now. I have a property closing like next week. It's a cottage property about 45 minutes from here on the beach. And I'm going to Airbnb it. And I'm actually going to try my first development where I'm going to sever it and then try to build 2 lots. So it's going to be 3 lots, all with beach access. so the near Grand Bend. So that'll be kind of cool to experiment with different things. I have bigger, deeper pockets now, and so cash flow isn't my primary driver. It's kind of a cool project I just wanted to take on, right? Border Hopper, I see your comment there. Geo Mercury, thank you for loving the content. Border Hopper, how to get started in real estate. I'm gonna film a video probably tomorrow if I have time. I'm gonna go back to one of my first properties. I don't own it anymore, I sold it, but I'm gonna go back there and I'm gonna take some footage around the property so you guys can see what my first property looked like. And I'm gonna have someone follow me with a camera. I'm gonna give them my camera and have them follow me. And I'm gonna talk about my first deal and where my mindset was at when I was 19 years old, which was, over 6 years ago, or about 6 years ago exactly almost, that I bought my first property. 6 years almost today, really. So this is crazy, right? That like in 6 years, how much things have changed. I've gone from like a no one to, I'm still a no one, but at least I now am a retired no one. Okay, definitely trying to replicate Snowball. Yeah, we read that comment. So you're 17 right now and turning 18. I'm going to use FHA to buy a property. I don't know what FHA is, but like I could probably figure the acronym out. It's a US term, so probably something like your first time home buyer, maybe. Yeah, first time home buyer. Okay, we have the same thing in Canada, slightly different, but 5% down, you can buy a property. Just the mortgage insurance is pretty expensive, so just be careful. In Canada, it's really bad. I think in the US, it might be not as bad, but something to think about there, right? That, yeah, at the end of the day, you really gotta consider that the mortgage insurance has a cost. But yeah, if you're in the right market to house hack, you can just make all that money back, even for the mortgage insurance plus appreciation and whatever. Let's say I rent hack and my roommates find out I'm living. How do I respond? We kind of hit that one with a different comment, a little bit lower. Yeah, you just got to lay down the law at the end of the day and just charge the market value. Farhan says, lol, high. I don't know what high was about. I'm not high right now. I know you think our SK is just smoke up all the time. Nope, not always or ever. Just depends on who you are. Okay, so Mike, while you were saving up that first 50K, did you save it in cash or did you invest some of it? So I was investing, I was trading, and believe it or not, I actually lost some money in my first few trades, and then I made a mistake and I had a leveraged margin account, and for some reason they had this thing open in my brokerage account where I could lever 2 to 1. They would lend me at 6%. My credit score was good, whatever, and they just decided to lend me 2 to 1. So I had like 50,000 in this account, and I borrowed 2 to 1. So I think I borrowed $140,000 in shares by accident. I put an extra zero, and I was trading on a silver company. It was like Standard Silver Resources (SSRI) at the time, and I believed in the company. Like, at the time, there was a bit of a value play there, and I'd been losing. I'd been trading some shares, and the cost of trading was expensive, and I made some bad decisions, and like I thought I could beat the market. And like, you know what? 99% of investors can't beat the market long term. You might have years where you're up, but long term you will underperform the market. So, yeah. Anyway, I basically put this trade in. It was huge. Like I borrowed 2 to 1 at 6% for like a week, and then I looked at my thing. I'm like, what? Market value like 160,000. Like, oh my god. And then I realized I thought it had grown so much. And then I realized, oh no, I just borrowed a ton of money by accident on margin. And I had executed a trade. I was tired that day, and I didn't realize that I executed a trade on margin mostly. And I sold and like made a small money and made my money back. I think I was up like 2,000 overall. So yeah, that was kind of my experience with trading. I've done a lot of different trading and stuff. I took some value investing courses and stuff like that. So I do have a bit of a background, given I have a finance degree. You'd think I would have an edge, and yet still I believe I can't outperform the market. I just lost my chat here. Let's try to go down and find it here. I put a comment on your credit score video with a link on how to view YouTube messages. You just click on the top right, go to Creator Studio, Community Messages. Ah, thank you, Murph. I appreciate that. I will check that out. I did not know that was even a thing. Here I am, like what, now 2 months into YouTube, and I took 3 weeks off. So like I've been doing this for like a month. So I'm just learning things. Be patient with me. Did you keep your startup money for your first deal all in cash while saving? No, I used everything to buy my first deal. It was tough to fund the first deal. I just remember it being a lot of work, getting it all financed. I'll walk you through the whole video of how I did it and all that sort of stuff. Like I say, I was trading with it. I did have it in cash at certain points. The bank did want to see it in cash when I was applying for the financing. They didn't want to see it in shares. So I had to sell the shares off and keep it in cash for like 60 days in my account to get the financing. And that was a requirement back then. And I didn't know any workarounds back then. I just did what the brokers told me to do. And like 6 of them declined me anyway. But that'll be another story about like it was a hard thing getting a property at 19 without a full-time job. Okay, have you purchased real estate from wholesalers? Yes, I can say that I have. I did purchase real estate from a wholesaler. My first purchase from a wholesaler was actually this year in 2018. Bought a student rental and it was way below market value. I paid them a $15,000 wholesale fee. $15,000 we paid them for the deal. I think it was like 210. I'm renovating it right now. I can go take a video for you guys and post it up if you want to see. We're turning into a 6-bedroom student rental. It has a sweet in-ground saltwater pool, and it's like literally like I can almost throw a baseball to the college. So it's in a great location. We're going through the whole permit process right now to get the unit renovated and blah blah stuff. But yeah, so I paid $15,000 fee. You'd think, why would you pay someone $15,000? They literally just got a piece of paper signed and they handed it to me. But that piece of paper is worth so much. When I'm done renovating it, it's gonna have an ARV after renovated value of like 350, and I bought it for like 210 plus the wholesale fee. So, you know, huge margins there to put in 20 or 30 grand in renovation and a bit of stress. Easy 100 grand. I'm joint ventured on it with a friend, so we'll split it half. It'll be good. What was your real estate goal? My goal is to own mega apartment building complexes, hundreds of units. You know, I've had lots of different goals. I think the paramount goal for me was financial independence, like not having to work. I wanted to be there for my daughter, there for my wife, just be home, not having to get up early in the morning too. I hated getting up at like 6 and 7 in the morning and grinding to work. It just sucks. So for me, that was a big goal, was to get away from that and unlock financial independence. And so when I unlocked financial independence, it was like I'm the first in my family like to unlock that. So that's huge. At the end of the day, it just comes down to, you know, I don't know. Just you gotta prioritize your goals. For me, it was, you know, the thing with multiplex complexes is that the returns get smaller as you scale up. So you don't get the same return you get with small residential. You get a lower cap rate in commercial properties. Plus the interest rate's at least a percentage point higher. So you lose on the interest rate and you lose because the returns are smaller on the big buildings. And it's just, you do get one roof, you know, you get those economies of scale, right? Just having one roof, everything's under one area, easier to put a superintendent in, a property manager in. But yeah, for me, it's just never been, real estate really for me was not, the goal has never been to be like a decamillionaire. I waffle, like sometimes I'm like, you guys saw like one of my old live videos where I was like, oh, I should build a multi-million-dollar company, and I might, I don't know. If enough people tap me on the shoulder and beg me to invest their money with them and do joint ventures, I might start a corp up, and I'll just do half with each person, like a separate joint venture, and help them out. If I have the people and the systems in place, I don't want to be managing tenants. Like, it sucks. I've changed the toilets. I've gone to fight with tenants and drag tenants out and all the bullshit, like crap to deal with that, right? Like, I've been down that road. I had 75 tenants at peak, 75 phone numbers in my phone that texted me minimum once a month. Like, I had to text them for rent and whatever, but like every time I had to go into the unit, I had to give notice, whatever, contractors going in and out. I was probably sending 3,000 to 4,000 text messages a month just to my tenants. Brutal. I had a property manager, and they would still one guy would find my number, and they would all text me around the property manager. I've been through it all, trying to implement the systems. Real estate's a lot of work, guys. People make it sexy, they make it sound great. It's a good way to earn a lot of money. Your return on investment's pretty damn good, and you know, it's a lot of work at the same time. So there's a trade-off there. People call it passive income. It was clickbaity of me. I'm sorry, in the video I released today when I said like I included my January's rental income as passive income, because you know what? It's not really passive. Let's be honest here. Even if you have a property manager, you're managing the manager. Even if you have good trades, like I call someone and stuff, like I give the number right to the tenant and they call and he automatically goes if it's less than $100 or whatever, you know what I mean? So like I have systems in place now, but still, there's still stress, effort, energy, all of that, right? At the end of the day, no one's as good as you, and you know, everyone like is like 60% as good at managing things as you are. They care 60% as much. Employees just don't care as much as you do. So you have to align that incentive structure to figure that out here. So let's keep going. FHA is 3.5% down payment. Okay, so same thing as pretty much as in Canada. We get 5% down. Same sort of crap. Just you got to pay private mortgage insurance, so the bank can feel confident. Isn't Airbnb cheap for the person renting? What are the pros and cons renting out Airbnb versus getting a regular tenant that pays monthly? Here in my market, Airbnb can generate 2 times gross rents. So like market rents. So you can rent out a unit on Airbnb and generate twice what you would if you were renting it long term to someone. So if market rent is 2,000 a month, you get 4,000 a month on Airbnb, but you're going to have to deal with the turnover, furnish the unit, et cetera, et cetera. You can do it. I mean, if you have the energy, and I see people, I know someone in here who does it really well, has a business, and they haven't regulated it in London. The council voted not to regulate in our city. So there's no regulation right now on Airbnb, and that was a good freaking decision for a number of reasons I won't get into in this video. But you know, she puts a manager in her properties, right? She tosses a manager in the properties that is responsible for the Airbnb, and if they get 5 out of 5 stars and they meet certain metrics, then they get their rent discounted based on the revenue that's generated from the properties that they are managing. So maybe she'll have a basement apartment and she'll give it to the Airbnb manager, and they'll pay market rent for that unit, and then the rent gets discounted. Effectively, they're being paid as the upper units change over, and they handle all of that. So that's something you can do. That's definitely something you can do with Airbnb to get higher return. You can crank out like a 15-20 cap rate with Airbnb properties, and you can outsource a lot of it to the manager and have them do everything. So that's something to think about. Isn't Airbnb cheap for the person renting? What are the pros to renting out Airbnb versus getting a regular tenant that pays monthly rent? We just talked about that one. That was from EZZ. And then the 2% high interest rate. Not you. Got you. Okay. I'm going to try and make it out to the next Fire meetup. I want to pick your brain a bit. Sounds good. I often get crowded at these meetups, so I enjoy it. It's just pretty much this, but like everyone talking. There's tons of other people there that are even better than me. Maybe their story isn't as sexy as mine is, but they've got they're like maybe 40 years old, and they have a ton of experience and knowledge that they're willing to share, and they're awesome people. So great meetups. We have it at a local pool hall and bowling alley, and they give us a whole venue usually. I think they're doing renovation though, so we might be doing it outside at Vic Park, which is a beautiful park, Victoria Park, in London downtown. So that'd be a cool outdoor event. We'll probably get 50 or 60 people, I think, at least. I think we might even clear a little more, which would be really sweet. Maybe we'll do a little presentation before the start of each of the meetups out there like we used to. Damn, this guy is still up. Pineapple King, man. I've seen you, or woman. I don't know if you're a man or a woman, but I assume king, I assume man, but can't assume. Maybe you don't use a pronoun. Maybe you use pronouns of they or their. No judgment here. No judgment. Thank you for the comment. I've seen you before. It's great you jumped on the live video stream here. Yes, I'm still up. 2 hours in, we were still going. I promised to go until the questions run out. So I'm hoping to get faster and faster because it's like 2 in the morning. Great ARV from Michael Chong on that when I talked about book recommendations. Check out earlier in the segment, I talked about a few books. Early Retirement Extreme is a fantastic book written by Jacob Lund Fisker. I'm going to do a video in tribute to him. He was one of the guys who kind of planted the seed in my mind about you can retire early, that like this thing exists, that you could just reduce your expenses and you'd be able to retire really early. Do you have a tax guy, or do you do your own taxes? I feel like it might get tricky when you have money in and out on dozens of properties. I do have a tax guy. I do my own taxes. I have someone I can talk to, a friend of mine. Keep in mind, I went to school for finance and accounting, so I have experience in accounting, and I was actually getting my CPA. I worked at KPMG, and I had 6 months towards that before I jumped into consulting. So I have a background that allows me to do my own taxes. I hired it out one time in 2014, and I copied and emulated how to do T776 forms. Last year was brutal. You guys can check my Instagram, my Facebook out. Like, it took me a month to do my taxes this year because I sold some properties, and I literally had a 30-pound box of receipts. Like, I probably had 250,000 receipts at least that I was going through, and it's like for all these renovations, all the properties I did last year, I did like 10 property renovations. It was a nightmare. Like, I got a bookkeeper now I'm working with, so I pay a bookkeeper $15 an hour to do the manual stuff in Excel, and then I'll do my own taxes because I know the tax law well enough that I think I know my situation better than the accountant does. So I feel like I can make a better decision as long as I know the questions to ask. So even if I don't know the answer on the tax law, or I don't know exactly the nuances of how it works, I know the questions to ask Google or the questions to ask an accountant. I'll probably outsource my taxes. like next year. They're not too difficult, at least in the US. I'm a tax associate though. G1 Mercury. Cool. You're a tax associate. That would be sweet if you were a Canadian tax associate, because then I could poke your brain for some knowledge. You know, the tax law changes all the time, so I don't keep fresh. But back in 2012, 2013, you know, I had this big tax book and I read through it, and yeah, like it's not that difficult. I have to manually mail in my taxes, which sucks. I can't do it online because I have each property is considered a financial statement, and so I had like 14 financial statements attached to my tax return. So I do a financial statement for each and every property, and then there's statements when you sell a property as well. So it's, I think my return was like, I printed like, our return was 170 pages or something ridiculous. Like now with all these videos, I'll probably get audited and they'll like want to go through the whole box of receipts, which is cool because like I did everything above bar, but just a pain in the ass I hear to go through an audit. I've been audited once before, but not an in-depth audit. So that would suck if it happened, but I'm prepared if it does. I have my receipts. Hopefully the carbon copy doesn't disappear on the receipts so then I can't read them. I hear that's happened before. Thoughts on levering up 20% down to buy a REIT from a cash flow perspective, not much arbitrage opportunity. Yeah, I mean, it's hard. REITs are publicly traded, especially ones that are publicly traded with no insider information. You're getting no edge. So you're just buying for cash flow or speculation, like speculation and cash flow. The REIT is already levered. So like when you put $1 into a REIT, they're going to lever it up. Maybe they can't go like 5-to-1 like you could personally. Maybe they're going like 3-to-1, like 35% down is probably what they're doing if they're buying commercial. And you know, commercial real estate also requires more down and whatever. When you're buying that many properties, the banks are going to require them to not lever up as much. But you could theoretically get insane amount of leverage if you levered up and then the REIT levered the money up you put in with them. So that would make an insane return. Yeah, I should do a video on this, like comparing the REIT to like the basic, like crappy rental property. I bet you that like if you weren't buying smart, if you're just buying like the average rental property, like if I just go on MLS and grab an average property, it's like kind of whatever blah, like an average investor might buy, that's not smart, and just like average basic rents. You know, I think that probably it would come down to the REIT might outperform with the right leverage. If you could get cheap enough leverage, like a home equity line of credit, and then invest in a REIT. Yeah, it's a smart idea. You just give me an idea for a video. I think that'd be pretty cool because people shit on REITs. And you know what? Like there are a lot of shitty REITs that deserve to be shit on, but there are a lot of good REITs too. So that's something to consider. And private REITs, if you're an accredited investor, are amazing too. There's some really good ones in my local market that, like, I know guys who do that and invest in that, right? And they do pretty well. How can I use my time most productively in pursuit of FI owning real estate? Currently, I meet investors, read about it, check on deals, and watch channels like yours. You know, you're on the right track. Like, at a certain point, there's not much more you can do. Biggerpockets.com. You know, at the end of the day, frick, guys, I'm getting pretty tired here. I still gotta go have some food. I'm starving. Getting the midnight munchies. You know, I think you're making a lot of the right decisions, and just keep networking, keep meeting people, keep watching the videos, you know, there's a point where like, I remember when I was into it and I was maxed out and I couldn't buy any more properties, and it was like a 6-month period where I had to save the next down payment, and I was renovating like 2 properties, and I had to wait till the renovations were done to get the refinance. And it's like 6-month period, and you're working day in and day out, and you're grinding like a freaking animal. You get home and like, it's like I would get home like 2 a.m. now and get up for 7:30 for work and do it again and again and again every single day. And I would take like 1 day off to like be with family and stuff. But it's, you know, just balance is key too. Focus on balance. But yeah, I think you're making all the right decisions. Try to focus on spending less, earning more. Keep that gap huge. Just the more you're saving, the better, the closer you're going to get. And just taking in the knowledge, because when you're ready to go, it's going to be huge. And I think one thing I could have done better was spend more time, especially my first deal. I could have met up with some realtors locally and found a good one, and then looked at like a dozen properties or more. So that would be something I would recommend as well. What role did your wife play in your success? Jay Davies. That's a great question. My wife has been supportive since day one. We are high school sweethearts. So we are celebrating our 10-year anniversary in early November. So we got together when I just turned 16. When I was 16, we got together. So I'll be 26 this year as well. So yeah, she's been supportive since day one. I don't think real estate has never been really her thing. She doesn't really enjoy that. But you know, she you know, she's been supportive since the beginning. She went in with me on our first property. You can check out my Instagram, guys. Slide into Instagram and see. She's there on the work site sometimes. Like our daughter was in like a playpen, and we were cleaning up garbage outside. Like when she was pregnant, I wouldn't let her on job sites. So I didn't even let her go on the job site when there was like renovation work being done because I don't want the dust to affect our daughter. Like my daughter was like my goal in life, right? Like I want her, I love her so much, and everything is about her. Like it's, I don't want, this is why financial independence is so important, so I can have that stability for her. I don't want her to grow up the way I grew up. I want her to have a better life than I did growing up. I don't want her to have to move around a lot. I don't want her to have that, like, to go without. And so I'm not going to spoil her. I still want her to have some, to go through some of the experience I did, but I just want her to have everything and have all that opportunity that's there for her. So, at the end of the day, my wife was there supporting, but supporting from home. So I would get home at like 11 and she'd have dinner ready, made, and a lunch pack for tomorrow so that I didn't have to spend money eating out. Even though I was running ragged, she was making sure that like we were staying on point with our budgeting. And so like I owe a lot of my success to my wife's like motivating me. She did try to slow me down too. She's like, we shouldn't buy this property. This probably isn't a good idea, Mike. You're taking a lot of risk. It's yeah, I mean, she probably tried to slow me down more than anything else than try to speed me up. But I'm just a really high energy guy, and I just go, 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 go. And so I push balls to the wall hard to unlock what we have now. And I think she's thankful. She quit her job and retired with me. So she's an at-home mom, and she does do some things part-time. She's a graphic designer and stuff, and she does do a bunch of stuff. And she's somewhat involved in the properties on occasion, but I would say like, I probably did 85% of the work, and she did maybe 10 or 15, but she was definitely there supporting me like all the way through. And when we kind of converted to becoming from like, we're decent with our money. Like we know how to like, sort of manage it and like, not spend too much of it, to like super frugal mode, like no Starbucks. I got her off Starbucks, and that was huge. And since we made that shift, I can do a video on like how you sell your partner on financial independence, retiring early, because it's not a glamorous life. It's being more frugal for a while so you can build that huge nest egg and retire early. But I sold the idea that like you don't have to go to work. You can be there for our daughter. We can travel. We can do whatever we want. We're free for the rest of our lives if we just make like a small sacrifice for the next 5 years. And she was on board. We had a lot of long night conversations, but like once she committed to it, my wife was amazing. She just so on point, super frugal, kept me true to myself and kept me grounded. And that was her big thing, is she kept me grounded. Okay. I'm trying to catch up. I'm getting behind on these. These questions are too deep. How did you learn to invest in real estate? Trial and error. Trial and error. A little bit of reading online too, but a lot of trial and error. How can you add value when asking to meet with an investor, so I'm worth their time to meet? Yeah, good point. That's really, really important. Nino Jones, great point. When you're meeting with someone, when you say, hey, let's meet up, add value in some way. If you got to pay for lunch, there was a lot of like when in 2016 I started meeting with people. Even though I'm frugal and like I'm super frugal personally, I would go without, like on a personal perspective, I would go out for lunch and I would buy lunch for someone I wanted to talk to. Like I remember spending like $12 on lunch, and I would get water for myself because I really wanted them to feel like they were valuable to me. So that was something that like I would recommend if you're meeting with guys. People appreciate that. Like if you buy someone lunch, they're gonna appreciate that. Like someone like myself, even I appreciate that like crazy. But yeah, find ways to add value. So even flattering them in some way. If you know what their background is, just flattering them. Or, a lot of guys are really busy in the trenches grinding. Just say, hey, like, can I come, like, help you do renovation work for a day? I would love to just, like, come and work for you for free. I've had, like, 5 people do that. I've had people come and follow me around for, like, 2 days. And I was working at the time in the trenches, going from site to site. And I was literally laying floor. And they were handing me floor planks. And we were clicking it together or whatever. And we were, caulking the baseboards and stuff, and they were there, right there, and they would ask me questions as we're going, right? We'd have a conversation, we'd do some work, they would learn something, and they would get all their questions answered. So that's something that's, that's something that's kind of, yeah. Done drugs. You know what? I'm super straight up. Like, no, I don't do any heavy drugs. Like, I don't even hardly drink. It's been like 2 years since I've had anything to drink. There was a time, like, I've been drunk before, but I just, don't have time for it. I don't enjoy it really that much. So, yeah, There was a time where I would in uni college, but nope. Pretty straight. Marijuana is becoming legal in Canada, and so that's all I'm gonna say about that. So it's legal um, very shortly here in Canada. What drink do you prefer at Tim Hortons? I don't even drink coffee. You guys might think I have vices. I have no vices. I don't smoke. I don't drink. I don't drink coffee. I worked at Tim Hortons for over 2 years, from when I was 16 to when I was 18. I worked at Tim Hortons almost full time. So I did obviously try their coffee. Their iced coffees are pretty good. Their iced cappuccinos are probably my favorite. I know everything on the Tim Hortons menu because I worked there. That was one of my first jobs after I started a little business cutting grass, and then I got my first real job. I was busting it in high school 25 hours a week. I would work after school, and then on weekends I would do two 12-hour shifts. And I was the weekend baker, so I baked all their goods and served customers. What do you think the California Bay Area real estate market will crash? Or when, sorry, do you think? Sorry, I'm really tired here, guys. It's almost 2:30 in the morning here, or whatever, almost 3 in the morning probably. I'm burning out here. I actually don't know a lot about the California Bay Area, so I can't really say when things might crash. That would be just me speculating. I don't know the market as well as, as maybe Graham would, or a local realtor in the area. You might ask them, they would know better. Prices do seem very, very high in those areas. And so you could think of I could hypothesize some catalysts for a market correction. If you check up in the video earlier, some of the things way back a couple hours ago that I talked about there would definitely have an impact on the market there. Border Hopper said, you should make a video on what it was like becoming a millionaire. It doesn't change who you are, really. A lot of frickin' work is what it was. But I can make a video on it if you guys want. If the demand's there, I'll do it. Do you regret going to college? I talked about this earlier in the video. Check it out. We talked about this. The short answer is yeah. Yes and no. You're a good guy, Mike. You definitely have your priorities straight. Thanks, G1 Mercury. Appreciate that. I like to think so, but I got to prioritize my family. That's number one, right? What was your job and did it pay well? So I worked at a mid-sized IT consulting firm, IT management consulting and analysis. And in my first year, I was a researcher. So I wrote blueprints for a living. And they were 250-page blueprints. And so I would just research all day and write reports. Every 8 weeks on Cycle, I had to publish 250 pages. So I worked a lot in PowerPoint, and I built supplementary tools. Then the managers took on site, and the directors took on site to then implement. And then in my second year, I was a senior, so I started going on site, implementing some of the stuff I was researching and writing about. And then in my third year, I was a manager. So 3 years I suffered. I grinded in a job I didn't really enjoy, but it was a great learning experience. I learned a ton about how to, how to research, do really good research. And then also, when I'm trying, I can put on a suit and I can present and solve problems on the fly. I got really good at solving problems on the fly, like being in front of a group of 10 people and just them giving me information and me figuring out the right question to ask, get the right information out to solve their problem, because that's what consulting is basically just asking the right questions, because you don't have the expertise, they have the expertise. You just ask the right questions so they can think in the right way to get to the solution. And did it pay well, to answer the last half of your question? No. I made $50,000 a year in my first year, $55,000 plus a tiny bonus in my second year, and $60,000 salary in my third year. And my employer probably doesn't like that I share that, but I don't care. I was way underpaid, but I lived in a low cost of living sort of situation. So, at the end of the day, it's just, I saw Nico's question come up. I'm going to hit it now because it's relevant. How do you ask the right questions? You know what? I could talk to this for a while, but it's just, there are certain frameworks that you can build to, think of how to solve a problem. And you can use those, like the gap analysis. Basically, a lot of it was figuring out the current state. Like I would help them figure out their current state. And then I would help them map out what their desired state was, where they would actually want to go. And that would help them build a bridge between the two. And I would ask a series of questions that would lead them from where they are to where they want to be. And effectively, we would find, it was more of I did more business IT consulting. So putting in systems in place. I didn't get into the deep technical jargon, more or less focused on how they could position themselves to be the IT departments in large corporations and mid-sized corporations, how they could position themselves to add a ton of value. Frozen liquids, it is early retirement extreme. I missed his question here. Hang on, let me go up. Boop, boop, boop. How to sell your partner on fire is a video I need. Hey man, that'll come out, I promise. What do you spend your days doing now? Not generally, but specifically. I'll do a day in the life video for you guys. How about that? Sorry to ask after you already said it, but what was the book you mentioned earlier that introduced you to the concept of early retirement? So Early Retirement Extreme by Jacob Lundfisker. I'm gonna get an Amazon affiliate link, and I'm gonna start putting it in my videos. I'm gonna recommend some good books, fantastic books. So maybe hang on and get that book. If you're in the local London market, I'll lend you my copy if you want for free. Did you have a mentor? If so, who? And did you take a course? No, didn't really have any mentors, unfortunately. Didn't take any courses. I've never taken a course. Just found things free online. I'm a really good researcher, and I'm good at asking the right questions, so I can kind of pull out information. I just sort of figured things out. You know what I mean? So that was sort of the way I did it. And I'm getting really tired here, so I'm going to start wrapping this up pretty soon. But if you guys want to keep going, I'll keep going. Met up with the millionaire real estate agent. He bought me a lunch. I feel like if I offered to buy him lunch, he'd be like, what the fuck? Yes, it's everyone's different, right? I'm super frugal, and like I appreciate the value of a dollar like no one's business. I still pretend that I'm broke. I still pretend that I'm poor, even though I'm rich. Not really rich. Like rich is like decamillionaire. I'm like decent. I'm doing well. You know, it's I'm going to sleep at some point here. Yeah, go to sleep. You guys. All right. If it drops below a certain number, if it drops below like 15 people on here, I'm gonna go to sleep. So if you guys share it and keep it above 15, I'll stay on. Okay. Affiliate link will come for Early Retirement Extreme. Great book. It's a little bit extreme. Like he's super frugal, but he was able to retire super early and on a super lean budget. I'm looking forward to meeting him actually. Here's in the Chicago area. If I can get a hold of, if anyone knows him, I'm gonna do a video on him and hopefully get his attention, like straight out to him. I'm gonna put his name in the video and like do a couple videos on him and how much of an inspiration he was on my life and who I am today. And hopefully I get to meet him and do a road trip. Same with Pete Adney, who's Mr. Money Mustache. I'd love to meet those guys. They were like online mentors to me. I had a lot of online mentors that I never really met in person, but people who kind of, I followed them. Similar to you guys following me, same sort of thing. That was the only real mentor I had because I didn't know anyone in my local market. Do you plan on splurging on a Lambo or a yacht? You know what? I'm not that rich. I could probably buy, I guess I could buy a Lambo or something, but a yacht? No, I'm definitely not there. Yeah, I get tempted all the time. The wife and I will go look at some houses or whatever, some really nice houses, and I'm like, I'm looking at lots, and I'm like, I could just build a really big house and then house hack it and then sell it tax-free or something for a profit. So it crosses my mind. On this journey, you guys might see me build a bowling house and then sell it. It won't be the long term, but I might just do it just for the experience. If I get enough passive income that, you just got to spend it on something, then maybe I'll do that. But I don't let lifestyle inflation kind of creep in. I don't get that much extra value from spending that much extra money. I kind of live the life that I like to live. I eat out when I want to. I use coupons. I get a thrill. Like when I eat something that's half price, I just get a huge thrill. Michael Chung, money doesn't change who you are. It amplifies who you already are. It's a great point. At the end of the day, financial independence is, gives you the ability to do whatever you want with your life. And that's the amazing thing. Thanks, guys. I see you popping in there. How many Mike Roseharts does it take to change a light bulb? Is that an insult? One, half, I guess, that one hand, half a Roseheart. You know what? I don't even change light bulbs anymore, really. I get my tenants to do all that. Sometimes I don't even supply them. Sometimes the tenants supply them. But yeah, I have supplied. I switched all my buildings to LED. I bought like 350 LED light bulbs. on a sale. They're like 25 cents each after this energy rebate program the government put out. Nino, thank you for sharing. I appreciate that. My brother's a veteran. Awesome. Says, my brother's a veteran. He can get a loan with no down payment. Any advice you can give me? Take advantage of that. There are some sweet programs out there that exist for veterans. Yeah, I know about that. Yeah, I mean, look into the pieces of it. If there's a lot of mortgage, like really high mortgage insurance, something to look into maybe. Do you ever plan on moving to the States in the future and getting involved in U.S. real estate? Also, do you foresee a crash soon? I've talked about this, guys. You know, it comes down to goals at the end of the day. And right now, I don't have any goals of moving to the United States. I'd have to get U.S. citizenship, and Canada's awesome. I get free healthcare, like 100% free. I go break my arm and go to the emergency. It's free. They're talking about free prescription drugs. My daughter gets free everything, free eye care, free. Canada's freaking awesome. And if you get your income just right, there's a lot of social programs that just, you know, Canada's an amazing country. I'm a big fan of Canada. I've done a lot of traveling to the U.S. My in-laws actually, my parents-in-law have a place in Florida, near Orlando. They have a trailer, and I usually go down there once a year. So I'll probably go down there this year for a couple weeks, film some videos, check out Florida. And I'm going to go visit Graham and Kevin, meet Kevin and Graham Stefan. I will drive down to Cali and visit them in the fall probably. But I probably just would travel, get the experience of the United States and see the areas that are nice. I've done a lot of traveling to for work to Vegas and New York and Pittsburgh and stuff like that. But it'd be nice to go and do it for travel. Like I said, go to visit some of those people and like Jacob Len Fisker in early retirement extreme. I'd like to see him in Chicago, and then go to see Colorado to see Pete Adney, Mr. My Mustache. So no, I don't plan to move there. Crash could be coming. Check the video earlier where I talk about my thoughts on real estate. I'll do a video on prediction. Thanks for sharing on Reddit. Appreciate that. So you only focus on real estate now and don't work no more. Yeah, so I do a whole bunch of things. If you check out some of my other videos on passive income, you can see what I'm doing. I do a little bit of hard money lending. I do. I also do a lot of other things too. I'm doing YouTube now. I do some mentoring. I do a little bit of coaching. It's gonna have to start becoming paid. I hate that. Like I hate paid coaching and paid courses. I just love to give things away for free. I'm a frugal guy, so. I'm starting to do a little bit of coaching. People are paying me to get on the phone with them, do one-on-one coaching where we walk through. So there's a little bit of that with my time, but most of my time is just spent relaxing. I watch some really great shows, like this show Billions, fantastic. I like that show right now. I'll probably crush an episode after this just to wind down and relax before bed. But I'm not gonna get to bed till 4 a.m. You guys are keeping me up so late. That's okay. It's worth it because I'm over 1,000 subscribers. And I need to be juiced up from that. Could you guys imagine if I can get to 10,000 subscribers, how many people I could impact, how many lives could be changed? I wish I had found, someone like myself, 8 years ago. So, yeah, I'm going to keep hitting these questions here. Maybe they'll run out eventually. Doesn't seem like it. The US needs to be more like Canada. Yeah, I think there'd be some value there. We are a pretty socialist place, so there's a happy medium. Our tax rates are pretty high. When's the next OREC convention? So my buddies Matt and Jeff hosted it, and I spoke 5 times at the conference. It was a 2-day conference, OREC 2018, Ontario Real Estate Conference. It was fantastic. We had 350 people come out. Graham was there, Graham Stefan, Meet Kevin, a bunch of other people were there too. This Tyler Gurr guy. Seemed a bit scammy. He's with Grant Cardone's 10x thing. I don't know. Yeah, so there'll be 2019. So next year in May, there'll be OREC 2019. So that'll be cool. I want to put on a conference here that's about financial independence, retiring early, here in London. Sort of like FinCon, but different. Let's go up and get some comments here. So did you only focus on one house and waited a year to get the equity, then snowball the rest. Yeah, so my first house was bought in early 2012, and I didn't buy my second house. I put an offer on it in late 2014 and didn't close out until 2015. So there's a 3-year gap from my first house to my second rental property. Um, I was just saving and working hard, finishing school up, and for the first year and a half of that, right, of that 3-year gap. And I was still working and everything, but just getting through all of that. There was a 3-year gap where I was working and saving. It's a grind. There's a lot of grinding. From 17 to 25, there's an 8-year period, and there was a lot of grinding in that. The snowball picks up really in the last couple of years, right, where it's really impressive. Do. Next one. Let's see. Thoughts on Justin Trudeau? Oh, don't get me started on the politics. You know what? I didn't vote for him. I'll stop there. I think he's done some pretty cool things for the country too, but he's an idiot when it comes to the economics. So he's a drama teacher. So we've not had a prime minister in Canada that hasn't been a lawyer or an economist with like a PhD or a master's in economics or has a law degree, ever, until Justin Trudeau. He's the least qualified prime minister we've ever had in the history of Canada, like 150 freaking years, over 150 years now, coming up in July. So yeah, don't get me started. The guy's an idiot, but the Liberal Party isn't terrible. I don't know. He's done some bad things and he's done some good things. I'm sort of neutral on that. He hasn't made big enough changes. This trade war though, that he's trying to bring on with Trump, or Trump's bringing on, and I don't know. It's not going to be good for Canada. Check that out in the headlines, guys. There's a trade war sort of starting out between Canada and the U.S. with some of the tariffs they're putting into place. That sucks. I'll talk about that. Maybe I thought about doing a video. It might be kind of cool, called I don't know, Market Mondays or something, where I just talk about like what's happening in the market and do like a 3-minute video on what's happening in the economy, what's happening right now in X or Y areas. And maybe people will find that valuable and they just watch it for like 3 minutes and be like, this is what happened this week in the geopolitical climate. And I do a lot of reading, so I'd be cool to like just share my thoughts on that if people found value. Could you put a link to the fire group in the description when you're done the stream? Yes, I will do that 100%. The Facebook group, I'll put it out there. We have a website too. There's like the On Fire podcast too, which is cool. Nice. Billions is probably my favorite show in 10 years. Such great acting. Frozen Liquids. I actually love that name. That's I like that. The PH for Frozen. It's creative. Yeah. Fantastic show. Fantastic show. I'm watching that with like Stranger Things and Westworld and a few other cool shows. Billions is one of my favorites. Like, it's just a really great business show. Let me scroll up here. Fam, it's 2:30. Jay, you're right. It is probably even, I don't even know. My phone's dead, so I can't even check it. But yeah, it's late, and I haven't hour done wine still yet. I gotta eat. Like, I'm starving. I got food out there in the kitchen. I gotta eat. Like, I might just bring you guys out there and have some food. You're not gonna like that. The playback isn't gonna like that, but pretty soon I'm gonna have to. This is the authentic Rosehart experience. You guys are just getting unfiltered. Like, I'm as tired as I'm ever gonna be, so you're getting the raw deal right now. Funny you say that. I'm watching the latest episode right now. Man, nice. I'm going to check out the latest episode after this when I eat. I'm going to watch it. So don't give me any spoilers. Do not give me any spoilers. Did you take any huge losses at the beginning you wish you would have avoided? Awesome. Good question. Yes, sort of. So on my second rental property ever, I spent a lot of money renovating. I had some issues with the property, and it cost me more than I thought it would. Same with my first Actually, my first deal, I bought slightly like at market value, so I got no deal on it. Maybe even I paid a little. I got paid market value, but I could have done a lot better on the negotiation. The agent that sold it to me double-ended it. I didn't even have an agent working with me. I'll give you guys the whole story in another video, but yeah, I spent a lot of money renovating and learning to renovate the basement apartment and stuff. And I house hacked, so it worked out really well because I lived for free. But I made almost nothing when I sold it. After tax, I made like $1,000 or $2,000. So it was a terrible deal. One of my worst. My first and second deals were my worst because I didn't know anything about anything. So you'll steal Graham Stephan subscribers soon enough from Border Hopper. That's not my intention. I don't want to steal the subscribers, but if we can share the subscribers, I'm cool with that. Never bite the hand that feeds you. He fed me a lot of subscribers, so I owe him for doing that video with me. I appreciate that. It was a lot of work getting that video together, especially the prop in that video. If you guys have seen that video, The ending too is super sweet. I love that twist. It's gonna be a good video. I think it'll eventually get like 100,000 views at least. So what do you think of Grant Cardone anyway? We'll save that for another video. Bro, you look like a school shooter. PP. That's insulting. A school shooter. Come on, I have a heart of gold. People who know me. Neil Diamond would say I have a heart of gold. I've been searching for a heart of gold. Your first house, did you put 5% or 20%? Just 20% down. I've never put 5% down. I've always put 20% because Canadian Mortgage Housing Corporation is the monopoly on the private mortgage insurance you need to buy less than 20% down. So they take 4% of your down payment when you put 5% down, and an automatic fee that compounds negatively against you at your interest rate of your mortgage. And I actually did a video on that. So go in my history and find that video of why I think you should put 20% down if you are buying in Canada. So yeah, borrow that money at like 10% from someone and avoid the CMHC insurance. You'll be better off than going through the insurance. Okay, what Canadian companies are you invested in? Honestly, just index type funds right now. There is one company that I'm investing in. S&S, Select Sands. They're out of Arkansas, but they're trading on the Venture, Toronto Stock Exchange Venture. I won't say anything more than that because I don't want to get in trouble, but I think there's huge value in that company, sns.v. So I have some shares in that company. Market Mondays would be cool. So if you guys like that, it seems like 2 people like that. Maybe I'll try it out. Maybe next Monday, I'll do a Market Monday and see what you guys think. Maybe I'll do it live. Maybe I'll record it. I haven't decided yet. What do you think about wholesaling real estate in Toronto? And how do you find motivated sellers? You can wholesale in Toronto. I know people who do it. It is possible to find motivated sellers. You can do the We Buy Houses thing. That works pretty well. You can do ads on Kijiji and things like that. That work really well too. Door knocking is good. You pay someone $1,000 to give you a referral. Say, hey, do you know any neighbors who might be willing to sell? Might be in a position you're interested. I'll give you $1,000. I'm not big on buying real estate in Toronto right now. The numbers just don't work for cash flow. You can go earlier in the stream and I talk a little bit about that. Majority of equities are in American companies. Yes. What podcast do you listen to? Do you even watch YouTube? For a long time, I didn't watch YouTube. I just didn't have time. I was grinding in the trenches. But I do watch YouTube. I do watch some really good channels. You guys can check out who I'm subscribed to. You can see. I also watch some other videos too. And at my point in the game, I can always learn more. There's always more to learn. But I'm at a stage where I don't really need to do a whole lot of studying about real estate because my system kind of works pretty well. It's more just about perfecting it. And there's not a lot of people talking about my strategy online. So podcasts, the Bigger Pockets podcast is fantastic. There are a couple other ones that are decent to check out as well. Do you watch Shark Tank at all? Yeah, Shark Tank's pretty good. I enjoy it. Same with Dragon's Den. Again, fantastic show. I would love to, at the university here, they have like a Dragon's Den, Shark Tank type thing. I'd love to become a judge on the annual competition. There's 3,000 students here at Western University that do business pitches on ideas they have. I would love to go there, be a judge, and then poach some of the ideas. So stay tuned when I do that because I'm going to invest in some different businesses and diversify, right? Real estate's fantastic, but multiple businesses, multiple streams of income. Hey, Mike, do you think it's a good idea to pursue my aspirations in data science and then just invest in real estate from there? Yeah, I think do what you love. If you enjoy data science, study that, and then work in that field if you enjoy that, and then work your way up to a real estate portfolio. Is there anyone you recommend for coaching wholesale real estate in Ontario? Yes. I know someone who would, Alan Lawrence. I know someone who would coach you in London, Ontario on wholesaling. Direct message me. I could also give you some tips and ideas. I have 2 really good friends here in London who are working on a course right now, how to wholesale, and they have wholesaling businesses. So yeah, I can put you in contact with them. How do you recommend starting in real estate with small capital? Yeah, so joint venture partnering, wholesaling, those are the two best ways to get started investing in real estate. You can also just invest in a REIT. That's one too that's kind of key. Um, we're coming up right now on like 200 minutes live, and we still have 12 people on. I cannot believe you guys. You're awesome. Let's say you're a bird dogger or wholesaler, not sure if they're the same. You sign a contract with someone to buy their property. You look for investors so you can collect their finder's fee, but you can't find anyone to buy. Yeah, this is the biggest risk with wholesaling. Um, yeah, then you end up pulling the bag. You got to put a clause in there to get out of the deal, or if you don't do that, then you're stuck having to close the deal, and so you got to borrow hard money to close that deal. This is why someone who has connection and like myself, if I had a deal, I could put it out there to my network of just people I know in London, and the deal would be gone like that. Like I can't even snap right now. I'm so tired, but like that, it'd just be gone. Um, I've always just been able to. I've always just wanted. I had opportunities to wholesale a couple deals last year, and I just closed on them myself. I went under contract with the wholesale clause, and I almost wholesaled it for like 20 grand. But I was like, you know what? I'm just gonna flip it myself, and I made 70 something grand on it. So glad I did that. I'm glad I just took the deal on myself. It's hard as a wholesaler to avoid. It's really hard to avoid um, Groose with the big caboose. Harry, what? I don't even know what that even means. How are people still on with me? Um, I think I'm through all the questions though. We're getting close to the end. For the replay, you guys are watching this. I appreciate the people who tuned in, and you guys should tune in next Wednesday at 7 p.m. and 7 p.m. EST Eastern Standard Time and 4 p.m. Pacific. My eyes are getting tired here, guys. Sorry, it's been a long video. Nino, you just want to keep me on here, man. I'll stay on though. Private mortgage insurance. If the deal's good enough, it makes sense. In Canada, it's too expensive. I think they just keep raising the fee on it, so it makes more sense, I think, to just borrow the additional money to get 20% down. Ruan or Rafa, I know you're in Canada. What do you think of the real estate market here in the U.S.? Do you believe in the 7-year cycle or the 18-year cycle? You know, I'm not. I did talk about the real estate market a little bit before, and I'll do a video on it again in the future. So it's the same kind of question again. I do think that, yeah, I don't know. It could really. I'm really tired. It could go up, could go down. I can't speculate. At the end of the day, you've got to think that if you buy for cash flow, then you're safe. You're insulated and protected. Oh man, you know, you're killing me. Meaning of life. I got a whole video on that. Check it out. I uncovered the secret to the meaning of life. It's an 8-faceted approach, an octagonal approach, 8 dimensions of personal wellness. So what makes someone successful? Financial is just one of 8 different categories. 8. Yeah, you guys know. You guys can train now. The secrets. So yeah, I mean, at the end of the day, I think if you're in a stable market that's diversified, you'll survive any recession. Hey, no worries. I'm glad you tuned in. Seriously, we've been going on this for like almost 3 hours, I think. I don't even know what time it is. My phone's dead, so I can't check. But this phone here, I could probably check. Yeah, I'd have to end the video to check. But yeah, I mean, 24 likes. I think at our peak, we had 23 people in the video. You guys are gonna let me eat my food now. Just tune in. Tune in next week. I'll do, if you guys want this weekend, I'll do another live session. No problem. Like, comment on my videos. If you guys want more of this, on my most recent video on passive income, drop a message and say, Mike, I need you to go live. Like, I need you to go live again at this time. And if more people like it, I'll do it. You guys want to see? I'll be quiet. I'll show you guys. I'll give you guys a tour. It'll be dark, but I'll give you guys a tour of my living room. All right, world. Woo. You're getting the real life experience here, guys. You ready? My daughter's asleep. Shh. We're going in the hallway past 2 bedrooms. All right, guys. I am seriously going to go to bed now, guys. It has been a long video, and I really appreciate you guys being here. I'm gonna get some food out of the fridge there, and I'm gonna wrap this video up. It's been a pleasure, guys. Thank you so much for the support. Thank you for getting me to 1,000 subscribers. I'm hoping to keep growing this journey, and I'll keep going live for you guys. At the end of the day, if you guys are finding value from this, I will stay on, like you guys can see. Been on for over 2 hours. So we'll pick it up again. We'll do another stream. I'll throw this one up so you guys can watch the playback. If there was something in the beginning there or the middle that you really wanted to hear about, you know what? It's something you can rewatch, so I'll upload it. Cheers, guys. Thank you so much for tuning in. I really appreciate that. We've been keeping over 10, like double digits this entire stream, which is freaking fantastic. I would love to have a stream, if we could plan it on like a Wise Wealth Wednesday for to have 100 people live. That would be freaking amazing. That's like my goal right now. So when that happens, that'd be sweet. I think this live thing could be a really cool way to engage with the audience. And I think YouTube means more of the live. It's a really cool concept. I did on Facebook daily video journals for like 7 months. Every day I did a video journal, and it's public. You can see that stuff. Maybe I'll upload some of those as a compilation video. You can see the crap I was going through at properties. So anyway, I'm out of here, guys. It's been a slice. Spend less, earn more, and maximize your returns to unlock a wealthier you. No, well, yeah, let's eat together and watch an episode of Billions. Cheers.